All right, everything looking good. Should be live. Welcome back to the channel. Crypto Trend Trader with our Friday morning market wrap up. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. It is March 25th, 2022 at 11 a.m. Eastern Standard Time. And today we're going to be taking a look at quite a few moves. Obviously, we are in quite a few trades. Some just scalps. Some have already closed part of our positions. Many of them are positional trades that we're expecting much further upside. Some are just scalps, and many are a combination in between. So we have laid out quite a few trade setups so far in the last couple streams, basically, in crypto, as well as pot stocks, in gold and silver miners, and various other industries as well. And obviously have had a great success in the last couple weeks and months. It is no surprise to anyone, as we have been discussing literally since the end of last year, a couple months before the end of last year, how we thought that 2022 was going to be the year of the pot stocks. And then over the last couple months have been laying out the exact game plan, technically and fundamentally, as to why we thought there was going to be some aggressive moves in pot stocks, and they were completely undervalued. We talked about, asset to book value ratio, and essentially just some of the completely beat down sectors, and also, specific stocks. So we laid out some trades in our last stream, and since then, many of those pot stocks are up between 20 and 50%. I've already taken profits actually on a couple of those. Not because I don't think that they're going higher, but just because when I see a 50% move in a matter of days, I can't take profits quick enough. So we can discuss something real quick about taking profits, and then we can continue on and we'll jump into some actual technical analysis. But the truth is, when I see a massive move like that, it's typically not followed up by just straight up continuation. There's going to be some kind of chop, a retracement, test for some kind of support or something like that. So when I see a 50% pop from an entry price, or even in some cases 25%, or arguably if you just want to be super conservative on taking profits, that's completely fine as well. Once you double up your money on an investment, if you buy something at $5 and it goes to $10 over any period of time, there's a strong argument to be made that you should at least take out your initial investment. Now, I understand that some people don't like to take it out because they're constantly thinking, what if I wouldn't have taken profits and now it's went up another double or another double or another double? That was just completely reckless. It was stupid. In my opinion, it's just free money from the market. If you have an investment, if you put $5 into a stock, just for simplicity's sake, or let's just say $10. You put $10 into a stock for simplicity's sake, and then the stock doubles in price. You now have $20. So you can remove half of your position now, and you're right back to having your $10. So you have your $10 back in your bank account or trading account. You have half of the position that you took out in the stock to begin with. So in this case, if it was just one share, you still have half a share left. And now you can put that money somewhere else. You can completely forget about that investment or that trade that you made. And it is literally just a free investment now that can just forever sit in your account. You never have to worry about it. You never have to care about taking profits on it. And it's literally just a tucked away savings account in a stock or investment. And chances are, likelihood, that if it's a stock or a crypto, in the case of a crypto with 4-year cycles, typically if you wait 2, 3, 4 years, even if it takes a massive drawdown, it's going to always end up higher, unless it's some trash bag crypto or something like that. But for something you actually believe in, like, a Bitcoin, or, an actual investment like Apple, or whatever your situation is. So, if it's just a scalp move in some trash crypto that we don't know anything about, that's only been around for a year or 2 years, if it hasn't existed, let me put it this way. If it hasn't existed for an entire cycle, if it's not one market cycle old, so in crypto, if it wasn't around in the last bull run, I have no interest in holding it long term. Now, I might end up with some crypto dust just left over from some scalp trades or whatever that I'm not worried about, but no significant amount of capital or investment, in my opinion, should remain in something that's not proven, because you can't invest in something that's not proven, in my opinion. That does not mean that you can't. You can do whatever you want. But I assume if you're investing in some crypto project that's only been around for a couple of years, or some gold or silver miner project that has never turned a profit, it's completely fine if you want to invest in those long term. But the truth is, you need to do the research, because I'm not doing the research on some trash crypto that hasn't even existed for multiple years. You know, if it came out in 2021, I'm not storing money in it. I'm not expecting it to hold value or, you know, be the next game changer. There's a, like, you know, 1 in 10,000 chance that happens based on the amount of cryptos and the amount of cryptos that actually serve a purpose. So that's up to you. If you put in the work, by all means, invest in miners that don't make money. Invest in cryptos that have only existed for 6 months, or that are meme coins, or, you know, stocks that are not profitable. That's completely fine. But you have to be able to, before you go to bed at night, look yourself in the mirror and say, am I putting in the work? Am I dedicating a certain amount of hours every day, week, month, year, whatever it is, to making sure to keep up with who's in charge? Are they sticking to the game plan? Are they, you know, ahead or behind schedule? Do they have targets clearly laid out? Are they hitting those targets? Are they generating income? You know, whatever it is, you need to look at that, and you need to hold yourself accountable, because I'm not going to hold you accountable. Chances are I'm not even going to look at, you know, if we look at an asset together because you asked for a ticker or something like that, I'm not going to actually look and go and see what that asset is. I'm not going to read up on it. I'm not going to look at the white paper and, you know, who the founders are and who's backing it. You know, I'm not going to do any of that work. I don't even have social media, so I'm not even going to know if, you know, Kim Kardashian or whoever is, like, you know, pump and dumping this. I won't even know. All I'll know is what the chart says. So it's important that you can tell yourself you're putting in the work. Now, if we talk about a real company that makes profits, you know, a Microsoft, an Apple, a Google, a Meta, something like that, you know, obviously I've done the research on those. I keep up with them pretty regularly, etc. So it's much more reliable. But if it's some abstract company, some abstract gold miner or pot stock or crypto, you got to be able to look at the actual, you know, fundamentals and technicals yourself and do the work. And if you don't know how to do that, you know, there's tons and tons of videos from me and many other people on how to learn how to do that. And then that way, you know, you can hold yourself accountable. Or, you know, you can ask for an in-depth analysis, and, you know, obviously for group members willing to go a little further, but I'll take a look at the, you know, the books or the financials or whatever, either live on stream or, you know, etc. So if you don't know how to do that, you know, obviously there's great resources, great tools, free ones, and then obviously, you know, with the one-time contribution, you can join the group and, you know, have resources at your disposal real time in a, you know, more advantageous way. So that being said, let's jump right in and take a look at some of these charts, some of these trades, and you know, essentially what we've been looking at here. So what's going on, Hunkiness? Good to see you loud and clear. Appreciate that, brother. Eric Wynn says, let's go. Yes, indeed. Let's go, my friend. UniQ, Friday LFG. Yeah, let's go, baby. Let's fucking go. All right, so let's take a look. We're going to kind of jump around here, actually. So we're going to take a look at pot stocks and crypto first, as we have quite a few active trades and have taken some profits on some of those trades as well. And then we'll kind of like circle back. We'll Jensaki. We'll look back at it for the traditional stock market and whatnot. We've got a couple meme stocks in the basket today. I got quite a few of the, I'm not looking at miners again today because they haven't really had much of a move lately. But we've got a bunch of the pot stocks and quite a few just random cryptos as well. So in full disclosure, like I said, you know, I'm taking profits along the way. I am more of a conservative trader / investor. So when I make some, you know, big thick gains, I like to lock those gains in. I'm not going to be one of those chumps that has something have a 20%, 30%, 50% move and then goes lower and ends up negative in a trade that I was up 50%. It's just not my style. Okay. But I also know that if I make 50% profit on something in a matter of days, and then suddenly, you know, it goes up another 50% and I closed out half my position, I'm not going to sit here and, you know, kick myself for taking profits too early. I just don't think like that. Some people, will look at, some people would rather lose money than leave money on the table. Some people would rather leave money than lose money. That's me. I don't like losing. I've never liked losing. I'm competitive. I like to make money. Now, I don't mind leaving some money on the table or some gains on the table. I also take a lot of my gains and put them into, what I would consider to be a quote unquote, savings account. So I'm not trying to just build up my trading account higher and higher and higher so that I can have more to trade with. I have plenty to trade with. I have plenty in my actual trading account. I build up like my investment account or, my gold and silver holdings physically. That's like my savings account or my insurance policy. So you may be different. If you are new to the channel or, haven't heard this discussion before, everyone knows that I have multiple different trading accounts, obviously for, crypto, brokerage accounts, etc. And each of those accounts is designed for different things. So I have multiple crypto accounts, some for just quick little scalp trades that I trade in and out of. And then I have some that are more long-term holds, or quote unquote hodls or investments. And that's primarily Bitcoin and a couple of the other like majors that have been around for some amount of time. So, the distinction of having different accounts makes it a lot easier to make sure that we keep our time frame in mind. Because if I have, a couple of Bitcoin that I don't intend to sell, I don't want those in like my scalping account. I want those, on a ledger. Same with gold and silver. If I trade in and out of gold and silver in paper contracts because I'm expecting a short-term move up or a short-term move down, that's completely different than my physical gold or silver that I want to hold. And gold and silver is a very, very good example of that and why I do it that way. Because when it comes to buying gold and silver, you pay premiums. In silver's case at the moment, those premiums can be as high as, 15, 25%. Gold in general, somewhere between 5 and 10%, depending if you're buying just straight up bullion or something kind of fancy. And the truth is, I don't want to be trading in and out of those things because if I pay a 25% premium on silver for physical, I don't expect silver to be having too many 25% moves to the upside and then go in and sell it. And then, with gold and silver, you pay the premium when you buy it and then you sell it basically at spot. So you pay over spot and then you get spot when you sell it, or slightly more if you're, trading like Eagles or some of the other like, nicer mints or something else with a higher premium on it. But the truth is, if you trade in and out of them, you're never going to make any money. Those have to be like a long-term holding savings account. Unless you just so happen to, like a situation where I was buying silver when it was like $14, $15 a couple years ago, and then it runs up to 30. That's a completely different situation. But even then, that's 100% gain. The premiums back then were so little. Now the premiums are ridiculous. Like when I bought most of my Eagles back at, silver was like $14 to $17. The premium on Eagles was like $1. And the premium on, I should say it was between $1 and $2, depending on the time frame. Closer to $2 probably on the Eagles. But the premium on like, just a regular ounce of bullion was like 40 cents. Now the premium is $4. So the price of silver has doubled, but the premium has gone up, 4x, 10x. I mean, it's crazy to think about. And that's why, in my opinion, there's a strong argument to be had for physical silver and gold. But the truth is, premiums have literally never been this high as a percentage. So the truth is, you got to figure out for yourself. For me, I like to lock in some of my trading gains in the form of gold and silver. I trade in and out of gold and silver on paper contracts. And then if we have a big move in gold or something like that, and I'm ready to take profits, or I'm ready to just lock that in as a position, indefinitely, because I don't sell my physical gold and silver almost ever. So if I'm going to lock in that position, I will literally just take it from my paper trading account and then I will, transfer it to an online, purchase and buy physical gold or silver and then have them shipped and then vault it. Or alternatively, move the money to my checking account, etc., and then just go to a pawn shop and buy it. So, you have to have a distinction between your time frames and what you're looking to make, what you're looking to gain, what your targets are, etc. Or else you're just going to end up, Jerome Powell, like deer in the headlights, not knowing when to take profits, not knowing when to lock in gains. And you can lock in gains at resistance or support. You can lock in gains after a certain percentage. You can do whatever you want as long as you're consistent with it and as long as you have targets in mind ahead of time. Because I'm going to tell you right now, if you have targets in mind ahead of time and then something moves 50% and hits your target, you're more likely to take profits than if you just blindly buy something, even if you're buying for a reason, at support, at a Fibonacci extension, whatever it is, and then all of a sudden it moves 50% in your favor, but you don't have any targets. You're going to think, well, I'll just take profits at 100%. And then it moves 100% in your favor, and you're like, well, I'll just take profits if it goes up a little bit more, a little bit more, a little bit more, a little bit more. And then you never lock in any profits, which is okay in a trending market if that's like a just straight up investment in your, 401k or, some other, tax deferred retirement account. That's completely fine. But you know that when you're putting something in, your 401k or, whatever situation it is, that's something that you're just going to buy and leave alone. You're not going to be trading in and out of, which arguably, depending on the kind of account you have, you may want to be doing trading inside of a tax deferred account because then you're not going to have to pay taxes on it until you take that money out. So, it's up to you, obviously, how you do things. I'm obviously not giving you financial or tax advice, but there's a lot of stuff that you can look into that will benefit you in the long run. But I think one of the simplest things to do that will benefit everyone, whether you're new to the game or experienced, is having different accounts with different time frames in mind. You know for sure that this crypto account or this brokerage account is basically a set it and forget it. And then you have one that you're logged into, 24/7 every day. You're trading in and out of, swing trades, whatever. And then eventually at some point in time, you decide, okay, look, I entered this scalp on a 4-hour time frame. I took profits on the majority of my position, but now on a daily time frame, this asset looks extremely bullish. And then, next thing you know, now it's on a weekly time frame, and you're thinking, you know what, this has just entered into a weekly or monthly bull trend that I expect to last for multiple years. I no longer need to have this asset just sitting in, my trading account. So now I'm ready to transfer it to a ledger or transfer it to, whether it's cold storage or just a different online exchange, if you don't want to self-custody or you're staking, for 10% on Kraken or whatever it is that you're doing. By having that separation, it's like the old adage, like separation of church and state. By having that separation, it doesn't mean that you don't, believe in government or you don't believe in religion. It doesn't mean that you're not going to still scalp or still invest. It doesn't mean that now you're just locked in on that forever. It just means by separating those two things, by moving things from your scalping account into, a longer term swing or trade or investment or whatever account you want to call it, by doing that, you take out a lot of like the mental anguish of something. Because you might buy, let's say for instance, you bought some Bitcoin at $4,000 like I did, and you intended to hold that Bitcoin through the cycle because you were expecting the bear market to end. And maybe you took some profits on that Bitcoin, shortly afterwards when we hit 6 or 8 or 12,000. The remainder of that Bitcoin just sitting in your trading account, whenever we see, moves up and moves down and things go down 25% or 12% or they shoot up another 50%, you're more likely to make a snap decision that you will regret by just having it there right in front of your face. If you transfer that Bitcoin to a ledger or, to stake somewhere or whatever the situation is to a different account, it's not sitting there staring you in the face when all of a sudden you have a 15% or 20% or 30% drawdown, telling you, hey man, just go ahead and sell it, lock in those gains. You don't know what's going to happen. You don't want to lose this. We worked hard for this money. So just get it out of sight, out of mind, and then it's not daunting you. And that's how I look at it. You don't have to look at it that way. I'm just explaining to you what I do and what I've found success in. And obviously it's going to be different for everyone. So, for me, I have locked in gains on, much of the crypto, many of the crypto trades that we have recently, taken, obviously, discussed some of the setups that we put here. And same with the pot stocks as well. A couple of them underperformed and I haven't locked in gains on. Some of them have performed extremely well, overperformed, or just performed extremely quickly. So again, I have went ahead and locked in gains on. In my opinion, you can never take too many profits. You can never lock in too many gains. So that is it for our little discussion to get started with. Now we're going to go ahead and jump into the technical analysis. So what's going on, XX Angel? Good to see you as always. Two idiots go sailing. Been a while, man. Good to see you as well. Gonna be a good day. Yes, sir. It is. Already been a good couple days. Eric Wynn says, I'm so surprised that this channel only has less than 100,000 subs. No moon boys filled with opium. Yeah, I have a certain way of scaring away all the opium moon boys because we use actual technicals. And let's be real. I mean, if you're one of those moon boys and you come in here every day and I call your kids ugly, eventually you're going to just leave because you're like, my kids are the cutest. Don't talk about my XR penis. Describing my exact problem right now, says two idiots go sailing. And that's the thing too. Two idiots, also two idiots, I should say, is the truth is, man, when I'm giving examples or I'm talking about what I do, it's because I've spent, days, weeks, months, years, decades developing these techniques and figuring out what works. And many of them are a combination or compilation of other people that have spent decades or even, 100 years doing these things. So when I'm looking at, Fibonacci and stuff like that, it's not like I invented Fibonacci. I'm using it because it worked for me, but also, it's somebody else has passed down like this wisdom or Charles Dow theory or moving averages or whatever it is. And the same with the psychology. I talk about some of the books and everything, and basically my own psychology and the way of doing things is a combination of, other older, wiser, richer men that have written down in a book. And then I've taken little tidbits from those books and then made them my own. And the same with my trading strategy. In many cases, a lot of people use a couple short-term moving averages and a cross, or, the 200 exponential or the 200 simple. Some people use if the price action is above it or below it. Some people use the slope on it. Some people use the 200 exponential and the 200 simple crossing. Not very many, but, I've taken all the things that I found that have worked the most consistently and, trading with the trend and, basically increasing probability of success, position size, separating accounts. I've taken all these different things and made them my own. And I'm here sharing them with you guys, not because I'm hoping to reap a reward from it, but because, the same way other people spend, hundreds or thousands of hours writing a book to share with people, let's be real. Most people that write a book don't get rich off of it. Most people that are writing a book are doing it because they're passionate about it or they want to help people learn. Less people, I think, do it now because, you can reach out to people directly on the internet and have like a following or whatever. But I don't think a lot of people do art, which, I consider writing a book a form of art. I don't think many people do it for the monetary compensation. I think most people do it because they're passionate about something. They spend a ton of time researching or learning about it, and they're trying to share it with the world, in the same way that someone would share a painting. Because you can paint an absolutely beautiful painting, and it can be the best painting and the most amazing painting. But if you never show it to anybody, do you really get joy out of it? Like, probably some, but I don't think nearly as much. And I look at like knowledge in a book and research or studying, or success in anything the same way. If you're not sharing it with anyone, is it really success? So UniQ, I can relate. LOL. Most of my recent altcoin buys are up 20 to 40%, which is higher than I was expecting. Just started thinking about taking profits, but don't have any targets. Yeah, and I mean, that's something that you can improve on, definitely, is like identifying areas before you even enter a trade, before you enter into a position, identifying take profit targets or, stop losses where essentially it's invalidation levels. So let's take a look at some TA and see what we got going on here. So starting with the daily Bitstamp chart, and then we're actually going to go to futures afterwards. Which is opposite of what I normally do. Not like that's a big deal, but just want to make sure that people understand. I'm switching it up right here. So with our Bitstamp chart right here, this is the exact pattern that we've been watching. So, without the drawing tools on, obviously we have retested or touched a 200 exponential moving average, which was one of my take profit areas. So what am I looking at right now? Why am I taking profits here? And what do I expect to happen going into the future? Let's take a look. So this is our same chart that we've had drawn for, at this point in time, what, months? I can't even remember when we drew this in, but I mean, it was a long, long time ago. We were looking at basically this support right here. And then after we double topped right here, we basically locked in that triangle. So that was like March 1st. So now here we are, at the end of March basically, and we're back at that same level again. So we've had this triangle drawn in place, and now we've filled out the triangle once again. And remember, when we came down here to the bottom, we were talking about this is not the time to be shorting because we're shorting into support. So what is the easiest strategy? Trading with the trend, obviously, and buying support and selling resistance. And that is basically, the pinnacle of, my trading strategy. I buy support, I sell resistance. I buy support, I sell resistance. I buy support, I sell resistance. And then eventually, one of those two things breaks. We either break support or we break resistance, and I'm wrong on a trade, and I get stopped out, and then I reverse and go the other direction. And then same with the trend. When we're in a bull trend, I'm buying support, I'm buying support, I'm buying support, I'm buying support. When we're in a bear trend, I'm selling resistance, I'm selling resistance, I'm selling resistance, because I'm trading with the trend. So I'm going net long in bull trends, and I'm going net short in bear trends. Or, even if you're not going to short the market, you're not going to use options, you're not going to actually short, no position is a short position. If I don't have a position in Facebook, I'm short Facebook because I don't believe in it. I'm not invested in it. And you could say that about the majority of companies or cryptos or whatever in existence because I don't have positions in them. If I always have a core position in something like Nvidia, like whatever it is, Google or Amazon or, whatever situation we're talking about, the S&P or Dow Jones. If I have a core position all the time, I'm long that position, and then I might hedge on and off, but I'm never taking off that core position because that's a long-term investment, something that I believe in for a long period of time. Now, I may go net flat by using options or a short position to essentially counteract my position, but no position is a short position. So if you name some random crypto and you're like, hey, are you, bullish on this crypto or bearish on this crypto? If I don't have it, I'm bearish on it, or I'm just not as bullish as I am on something else. And that's completely fine. But it's important to understand that if you don't have a position in something, you're technically short that. So you don't lose money if it goes up the same way you would if you have an open actual short position, but no exposure, is basically a short position. You're saying, I don't believe in this enough to own any of it. I would rather own more of something else. And that's completely fine because you might not be putting in the work on that. So even if you look at it for a little bit and you're like, well, this probably has some potential, but I'm not willing to do enough work. I'm not willing to invest enough time or effort into this asset that I want to invest in it. I'll just keep focused on the things that I'm putting my time into. And that's perfectly fine because you're trading potential upside or potential exposure to something for, I want to say, decreased risk because you're putting in the work on something else and you don't have the time or effort or will to put it in on, this extra asset class or stock or whatever. So here we have our Bitcoin chart. We're back at the top of the chart. We're at resistance. So in my opinion, and we see what do we have for our resistance? Well, we have the top of the triangle. We also have a 200 exponential moving average. That's resistance. So I sold into this resistance with my Bitcoin position that we took, I can't even remember where we entered part of it at, but we added to it on the retest of the cross as well. So, that's right. It was at the bottom of the triangle. So we took position down at the bottom of the triangle and then took profits up here. And that's perfectly fine. I mean, that was a nice move. Now, could it go much higher? I think it was somewhere around this area roughly. I could look, but it really doesn't matter. So when it's all said and done, it's like, a 15% move. Could it go much higher? Could Bitcoin literally go back to all-time highs and to new all-time highs? Sure, definitely. And we will add to the position along the way based on some of our criteria that we have. But we're going to lock in gains just in case, because if you didn't take profits, when we hit some of these levels previously, you went up and you're like, oh yeah, I'm up 15%. And then, now I'm back straight even. So, that's the difference is we're taking advantage of the oscillations in the market while we're trading inside of a range. All right, so back to the charts here. So what are the two potential possibilities? Let's switch actually over to the futures chart and we'll get a clearer picture here. But I actually want to do something we don't often do, which is go down to a shorter time frame and talk about, what I've been saying on the 4-hour and why I've been bullish on Bitcoin short term again, even though I still think we get rejected here, at least temporarily. When we cross back, the same way I use the 200 exponential and simple moving averages on the longer term time frames, which is the daily. And the reason I don't show 4-hour or shorter time frames typically on this channel is you only really hear from me live 3 times a week, so every day or two. And a lot can change in a 4-hour period. If I enter into a 4-hour trade, or a 1-hour trade or a 15-minute trade, like, on that time frame, it might only last for a couple hours or a couple days. And by the time you see me again, I'm like, oh, I already closed that out. I'm done. That trade's over, up 12%, closed. And now it's even lower. And you're like, oh man, I wish you would have told me. Well, I obviously am not here to tell people when to open trades or close trades, etc. I'm here to look at technical analysis and to help people to learn. In the group, I'd give a lot of real-time updates. But the truth is, when I take on a bunch of new group members, I almost like freeze putting trade setups into play nearly as much. I'll still lay out charts. I'll still lay out targets. I'll still lay out, potential stop loss areas. I'll still show off the charts on stream or in the group. But until people get a grasp for how things work and see more what I'm doing, I don't want people to just jump in, be 3 days in the group, and then just start following trade setups that I place, not knowing when to take profits or understanding when to take profits or when to take stop losses, etc. So, I tend to pull back a little bit, and that's why I like to have a delay between when new people come into the group and, when everybody's been in the group. I mean, we have members in the group that have basically been in the group for, years at this point in time. Some of the veterans inside the group, and you guys know who you are. I mean, I remember when you first started, and then I can look at, the charts you post now, the trade setups you post now, the way you discuss and talk about things. And I mean, you might not necessarily see it, or maybe you do, but it's night and day. It's literally night and day. I mean, the amount of confidence, consistency, the way I hear you talking with some of the newer members as well. I mean, I know that you've made exponential gains, and I can see who's going to be successful as, long-term investor or trader or, retiring early because of the work that they put in. And even if I didn't hear you ever talk about anything, just knowing the amount of work that some of you guys are putting in, I know you'll be successful in the long run. Now, obviously, remember, none of this financial advice, I'm not your financial advisor, but let's take a look at this short term here. So when we crossed over the 200 exponential and simple here on the 4-hour, and then we flip the slope on the 200 simple here, bullish, again, that's bullishness. On the 4-hour, we're bullish. So at that point in time, around like that 41.8 level or whatever, on the retest of the 821, or the cross of the 821 here, or, however you want to look at it, we need to look at that as a buying opportunity. And even though we're trading against the trend on the daily, because we're technically still bearish on the daily, we have to be bullish on the 4-hour because, we're above the 200 exponential and simple, and the slope is to the upside. And in order for that ever to happen on the daily, it has to happen first on the 4-hour. In order for it to happen on the 4-hour, it has to happen first on the 1-hour. And, same with the 15. And the same thing going bearish. We might cross bullish on the 4-hour, and then eventually it gets rejected, and then we go back into a bear trend, and it never, cross bullish on the daily. So that's why we use the different time frames, but the same exact strategy. So you guys know, obviously, that I use pretty much the same 3 indicators on stream all the time. I want to talk just a little bit about the TJD, TDMACD, the Jewel Thief, and then obviously we just talked a little bit about the TJD Master. So with the TDMACD, we're obviously looking for the same things here, bullish and bearish divergence, but also what we're looking for is the trend. So even though we've been oscillating inside this range for some time, when the TDMACD is below the 0 line, we've had a bunch of red histograms in a row, the slope is red, that's maximum bearishness. So that's a downtrend. So what we're looking for an uptrend to start in the TDMACD like we recently had here, what we're looking for is multiple green histograms in a row. Then we're looking for the slope line to flip blue. Then we're looking to cross over the 0 line. And once we do that, that's maximum bullishness. So the maximum case bullishness is something like this, where there's a bunch of green histograms in a row. We're above the slope line is blue, and we're above the 0 line. So we're still very bullish right now, even though we're at resistance. The same way that right here we have the maximum bearishness, we have a bunch of red histograms in a row. We have, well, technically, actually, maximum bearishness would have been like more back here, because here the histogram was actually above the slope line, but you get the point because the slope is still red right here, even though we're technically finding support on it. So when we look at that on price action, this is telling us basically on this time frame, on this indicator, that when we're seeing predominantly blue slope like this, we want to actually be long on this asset through here. So we're looking for confluence between all our indicators. So if you bought when that flipped blue right here, it actually lined up with a hard buy signal right here. So even though there was still a little bit of drawdown, what was the difference if you were looking at it as a risk reward scenario? Well, when we get the hard print and we get that blue, slope line, would have been right here. So the drawdown from that point would have been, we're looking at the bottom of that wick right there, 3.7%. So sure, it did go lower from that point when we got those two signals. But, the upside to the top of this wick right here was 15%. So we didn't know it was going to be 15% based on the indicators. They don't tell us anything like that. What they tell us is that, looking at it now, the risk reward was 5-to-1, which again, we didn't know at the time. It was going to be 15% upside. And it might still be, there might be another 100% upside. They don't tell us that. But what they do tell us is when the trend is beginning in that direction. And we'll see sometimes you'll get a false signal. We'll get a false buy, or we'll get a false slope right here, and then we will go lower. So that's why we look at multiple things and look for confluence. So we see here we had a big knife stab shortly afterwards. We had a hard buy signal. We had the blue slope line flip over. So when we got that knife stab down here, we know that was probably the bottom. And then if we look back at that previous bottom back here, we can see there's divergence between those points on the chart. Bullish divergence, telling us, okay, that was probably it. So then when the 8 and 21 cross right here, we now have everything pointing us to the upside. We are above the zero line. We're above the slope line. The slope line's blue. We have green histograms. We have the stochastics have given us a hard buy signal. We're in an uptrend. The blue stochastic is above the pink stochastic. And now we've got an 821 cross to the upside. And then I told you guys I took profits actually on this big pump candle right here. I basically sold almost the top of that big pump candle based on like shorter term time frames, and the fact that we had literally seen twice in a row a big pump above the 200 exponential and simple on the 4 hour, and then just get completely sold back into. And then it literally happened again. I honestly thought about re-entering immediately after that, but I didn't know if we were just going to get another rejection and roll over. So I didn't. I waited until we came back on top of it, and then I rebought back here when we retested the 200 exponential and simple, and then it held. As a matter of fact, I believe I bought right here at the top of this bullish engulfing candle. So I think it was 49.24 that I bought back in, which was only slightly below my target. But the difference is I took profits right here, I locked in gains, and then it sold off immediately. So no matter what I did afterwards, my gains were locked in. I could have just bought more down low here and been bullish and been, looked like a goddamn genius. Or price could have just went down and capitulated, and I would have looked like a goddamn genius. But instead, the opposite happened. We ended up at the exact same price anyway. So it was just like, well, now you just made an extra trade and, bought in slightly lower or at the same price. So great, good job. But the point is, though, is I won. I still won because price goes higher and I'm back in. Price goes lower and I was out and locked in my gains. Or, I end up back in at the same exact point, made an extra trade for no reason, but I mitigated so much risk. And that's the key, is to just not take drawdowns. So that's why that was so important to me. And I'm glad to just buy back in at the same price or even slightly higher. I'm completely okay buying in slightly higher once the 200 exponential and simple flip to the upside. I would be very happy to buy back in. Again, I didn't sell the exact top, but I sold somewhere like ridiculously close to the top of that candle while it was still live. I would be very happy to buy back in at the 200 exponential and simple cross right here, 1.8% higher. I would be glad to pay trading fees and an extra 1.8%, safety tax, insurance to buy back in here now that the 4 hour is completely printing bullish. So now that the 4 hour is completely printing bullish, I'm still going to lock in gains on longer time frame targets, resistance like the top of the triangle or the moving averages. But overall, right now on the 4 hour, there's no reason not to be bullish, in my opinion, on the 4 hour. Now, when we cross over to the daily, that's not necessarily the case. And when we look at Bitcoin and then we look at, Bitcoin futures, we're actually getting mixed signals now for the first time in a long time, but in the opposite direction. Before, Bitcoin spot was more bullish. Now, actually, Bitcoin futures is more bullish. So Bitcoin spot, we're getting rejected at the 200 exponential going into the weekend. So I would say typically there's a higher likelihood of a big move on the weekend when a bullish move on the weekend, because most people that are trading on the weekend, or trading in spot markets, or buyers in spot markets, are typically crypto bulls. And most people that are buying, on futures, or investing on futures, or trading on futures, are probably just traders or investors and really don't give a shit about crypto. I mean, they give a shit enough that they're participating in the market, but most people that are like investors or traders, institution levels, really just care about money. They're not trying to like hodl Bitcoin. They're not Michael Saylors. Let me put it that way. So we could easily get this test up here to the 200 simple, which would be that 48,400 target. But we don't know that's going to happen. And more likely than not, we probably sell back off at least some and retest some support, or at least halfway down to the mid-range, and then burst to the upside. So obviously there's a ton going on in this chart, but I just want to look at one of the Fibonacci levels that's on this chart, because I don't have it on the other chart, before we transition over. So here I have from the top of the range to the bottom of the range a Fibonacci level drawn in yellow. And it's probably difficult to see because there's so much Fibonacci going on right now, but just ignore the crazy stuff and focus on this yellow Fibonacci level. So we hit the bottom right here. We have the top right here. So what we were looking for was initially a 382 retracement, which is the minimum level retracement, for a bullish continuation. So in this case, a bullish continuation is actually bearish because we're in a downtrend. So if we have a 382 retracement, that's a shallow retracement before we get continuation to the downside. A 0.5 is Charles Dow theory, 50%. You have a move in one direction, you give back 50% of that move, and then you see continuation in that direction. And then the 618 is what we call a, golden retrace or deep retrace. It's the most deep retrace that you really want to see, and then continuation likely to come afterwards. Anything deeper than a 618, you probably, or there's a higher likelihood that you don't see continuation in that direction. So for instance, if we sell off right down here and then we moved all the way back up to 52,000, I would still expect us to see continuation to the downside. If we went much higher than 52,000, or say we went all the way back up to the 786, which is close to 60,000, the likelihood, in my opinion, that we would go lower after that is exponentially less. So if we hit the 618, I might say there's a 66% chance we still go lower. If we hit the 786, I might say there's a 50, maybe a 40, maybe a 30% chance that we go lower. And then, as we get up to the 886, I would say there's like a 10, 12% chance that we go lower. More likely than not, we see new highs before we see new lows. So at this point in time, my next target to the upside based on this internal retracement fib is the Charles Dow theory 50% of the move retrace, which is 47,454. And that just so happens to line up with the 200 simple if we hit it right around this time. And again, ignore this red line right there. That's not actually like a functional line that we're using for anything. It's for like some long-term stuff. So it would not surprise me if over the weekend we see a pop up. And again, please ignore that red line. I'm not going to delete it though, because it's for a longer term chart. It would not surprise me to see a pop up here to the 0.5 that also lines up with our 200 simple moving average. And then actually we come back down, get rejected short term, come back down, find support, go higher, move all the way up to the 618, and then we reevaluate from there. That would not surprise me at all. The same way, it would not surprise me if we just got rejected here, rolled back over and came back down to the bottom of the triangle, regardless of what happens, whether we go down or up after this. And again, the same way it wouldn't surprise me to see us break up to the 0.5, come back down, find support right here, and then actually it breaks down and we go lower. So there's three scenarios I see right now. One is we get rejected here and then consolidate more. Two is, we move up to the 0.5 and get a temporary rejection. And then, obviously there we have an A and B. We could either go higher or go lower. And then, the third scenario is we actually just make it all the way up to the 618. And that might be a combination of those two. We get temporary rejected here, we consolidate, we break out, we get rejected here, we consolidate, we break out, we get rejected. But that's three bullish moves in a row. We would need to bullishly break through the 200 exponential and the top of the triangle. We would need to bullishly break through the 200 simple and, the 0.5. And then we could make it all the way up on a bullish move to the 618. So that's three scenarios that need to play out, in my opinion, all bullish in order for that case to happen. So I would rather on the first time, I look at this as basically we're walking down the road and there's two paths now. We've already went up. So we're on the up path. And now we can either go up more or we can go down now. So that's 50% chance either way, let's say. So we're going to say, okay, let's take some off the table, and then we'll still bet that we're going to go up more. And then, oh, look, we pop up, we hit the 0.5 over the weekend or over next week. And then we say, okay, now here we are at another, another fork in the path. And it's like, okay, we can either go down now, back to where we were, or maybe even lower, or we can go up again. So again, I want to take profits there and say, okay, I'm going to continue betting that we continue to go up. But again, I want to take a little off the table just in case. And then the same thing when we hit the 618, by the time we get up to here, if I took 25 or 50% off here, and then 25 or 50% of my initial or remaining position, depending, and then do the same thing right here, maybe by the time we hit the 618, I only have a quarter of my position open, and then maybe we just go higher. Well, I'll just re-enter. I'll re-enter when I see bullishness in the markets with either the same position or a larger position, but I'll have locked in my gains and de-risked along the way as we're going to the upside. So that's why it's so important, in my opinion, to lock in gains along the way. And that's why I do it. And that's just me. Not everyone's going to be the same. Some people are just going to YOLO, and that's completely fine. Some people are going to be even more conservative than me, and they're probably not trading crypto. Because I think I'm probably as conservative as it gets when it comes to somebody that's trading crypto. I really am. I take profits early and often. All about locking in gains. But that's just me. I'm comfortable leaving money on the table to lock in gains. All right, so let's look at our Bitcoin futures chart now. So this is what I was saying about this chart is actually, for the first time in a long time, more bullish than the Bitcoin spot chart. So if we look back here from our top at 60,000+, when we came down here, we flipped the 200 exponential bearish on the daily. We never flipped the 200 simple bearish. And then we actually went to 70,000. And then we came down here and we saw the first signs of the 200 exponential and simple flipping bearish. And they've been bearish ever since. Now here we are for the first time. The 200 simple has started to flip back bullish and is actually, and it changes color when the slope is positive. Not based on if the 200 exponential or simple is above it. You guys know that. Here we are retesting the 200 exponential and almost the 200 simple, which we've already done once. The first time we hit the 200 exponential, got rejected. Second time we hit the 200 exponential, then immediately after, the 200 simple got rejected. Put in a higher low. Both times we got rejected. And now here we hit the 200 exponential and we're pushing up and we're almost at the 200 simple. So I think more likely than not, maybe before the end of the close today on the futures market, that we hit 45,800. Just because, that just seems like what would happen next. Does it have to happen? No. Maybe we get rejected right here and we just go lower and that was it. And we get another failed move up. We don't know what's going to happen. All we can look at is probabilities. But we know now that we're seeing something that we haven't seen for a while. And that is the 200 exponential and simple are both in a bullish posture as far as slope. So that is a good sign. That's a bullish sign. Now, what could happen right here that would make me more bullish? And what could happen right here that would make me less bullish? Well, if we just chop around between the two, it's neutral. If we go above the 200 simple at, 46,000, that's very bullish because now we have a positive slope and we're above them. And at those moving averages is probably where we want to re-enter a nice positional long trade. Could it fail and go lower? Yes. But if it goes higher, we'll look like a genius because we know looking back, in time that when this 200 exponential and simple cross, well, that was at 9,400. And from that point in time, we went to 70,000. And we know the time before that when it happened was, right back here at 5,600. And then after that, depending on what you're looking at, we either went to 14,000 or 70,000. So again, we look like a genius if we take that trade. Not because we're smart, just because we're consistent. We have something that works, we find it, we identify it, and then we stick to it. So again, it could easily fail and go down, and then, we just exit back out. And, oh, we were wrong this time. We got chopped out of a trade, lost 1%, 2%, 3%, 5%. But we know that we're the best trade that we can take is when a trade is entering into a bull market. And then we see that massive bull market take place. We don't know when that's going to be, but we know that if it takes us 1 or 2 or 3 or 5 tries to get that trade right, that when we do get it right, the amount we lost in the 1, 2, 3, or 5 tries we got it wrong is going to look like a drop in the bucket compared to the gains that we make. Because we'll be looking at, 5x, 10x, 20x. And you guys know my trade strategy. The whole point of my trade strategy is to essentially minimize losses. Top priority, number 1. minimize losses. I will not take a big drawdown. I will not take a big loss. I absolutely refuse it. Not possible. My system has me out of any trade well before I ever take a large loss. It's literally impossible. Well, I shouldn't say impossible, because you could get your, stop jumped, or, the exchange could go down and you can't trade if you're in like Russian assets or something. So it's not impossible, but the likelihood of that happening has to be a black swan event. Less than 1%. So I eliminate big losses. And then the next step is to let small wins and small losses cancel each other out. So maybe I have a little 5% gain right here. I lock in profits and then it goes away. Maybe I have a 5% loss. I lock in that loss and then I get out of the trade and then I'll just reevaluate. So they cancel each other out. So in the end, if I've eliminated big losses and then the small wins and the small gains, 100 here, 1,000 there, 100 here, 1,000 there, and they just keep canceling each other out, pluses and minuses, my account goes nowhere. I'm in the same spot. And then when we do hit those big gains, when we do hit that winner chicken dinner trade, that is where we really make our gains at. That's where we really make our money. That is what this game is all about. And the only way we're ever going to get that big win is if we participate in the market. And we don't know, but we have to get out of the way from the big losses. And then it's okay to let the little wins and the little losses cancel each other out. You guys hear me talk about free trades all the time. I will enter into a trade and then I will move my stop loss up to my entry point once the trade moves in my direction. And then a lot of times what will happen is we'll move up a little bit more and then we'll come back down. I'll get stopped out at break even. And that's fine. Sometimes it'll move up and I will take some profits and then it'll come back down and we'll get stopped out and we'll have a small win. Sometimes I will move my stop loss up and, or let's say the trade just goes against me immediately and we'll just take a small loss right away and that's it. We're out. Those all cancel each other out. We don't care about those. What we care about is the big boy gains. The 25%, the 50%, the 100%, the 1,000%. That's why we're playing this game. That's what it's all about. So if this happens, if this bullish scenario happens and we end up closing back on top of 46,000 in the next couple of days or weeks or month or whatever, and the 200 exponential and 200 simple are bullish slope to the upside, I'm long on Bitcoin. I'm back bullish on Bitcoin. I'm the most bullish on Bitcoin. Okay? But if we fail right here, if we get rejected and we roll back over, we're right back to where we started. And it's okay to be right for a second and then be wrong. It's okay to be wrong for a second and then to be right. We could be wrong on this rejection right here, and then we end up moving up, and then we buy in for 3 or 4 or 5% higher, take a small loss of what we would have had because we got out of the position and locked in gains, but we traded a ton of risk for a little bit of reward. And that's what we want. We want to trade all the risk for just a little bit of reward. And that's that insurance policy. That's that safety. And that's where conservative trading and investing becomes so much more powerful. So, for instance, right now, sure, I mean, we took profits basically at the top of this, and now we're seeing a little move back down in crypto, but it could easily go much, much lower right now, and then we look like a genius. Or it could easily come back up and go higher than when we got out, and then it's like, what an idiot, you took profits, you're a moron. But the fact of the matter is, we're seeing the move that we anticipated happening, the counter move. We've been going up, and now we're seeing a sell-off happen, because other people are doing the same thing as us. And who are those other people? Well, they're not just chumps. They're the market makers. They're the market movers. They're the whales. We're doing the same thing they're doing. So either they stole our strategy or we stole theirs, or we're all just reading the same books, and doing the same things. Regardless of what's happening right now, maybe I'm the whale. I mean, I'm not, but maybe you think I am. And you're like, oh man, every time he does something, it's exactly what happens. He's the whale and he's just giving us, clues. I mean, I'm not, but whatever you got to believe, it doesn't matter. The fact of the matter is what we do works because we're seeing it happen consistently over and over again. So if you can harness that, whatever it is, it could be something completely different than mine. You could say, hey, whenever I go see Miss Cleo on Friday and it's a full moon and then she tells me that the Grim Reaper's coming and she sees money in the future, I gain 20%. If that works for you consistently and measurably, and that's completely fine. That's up to you. I know it worked for me, and I'm using that, and that's what I'm sharing with you guys. So that being said, we have 2 big scenarios right now. We're at resistance. We talked about the fork in the road. We talked about potential bullish, potential bear situations. Right now, what I see here, I see a very bullish potential setup. And this was not some surprise. This is not some big surprise that all of a sudden happened. It's like, oh my gosh, this is crazy. Who would have thought? We saw this way ahead of time. When did we see it? Well, we saw bullish divergence developing. Remember when we talked about going back in time? Remember when we talked about this bearish divergence on the weekly chart right here? It was extremely bearish that we got this bearish divergence between these 2 points. Let's go to our weekly and look at it really quick before we move on. We see this massive bearish divergence taking place, a huge top right here and a little top right there with a rejection. We see a nice big top right there and then an even higher top right there. We see bearish divergence between those points. What did I say back here about this potentially turning around and putting in a higher low? I said, we already have bearish divergence on the weekly. Who's to say we don't put in bullish divergence on the weekly? And now look at what's happened here. Here we have a low right here. And then here we have a lower low right here. And now we have 2 grain histograms in a row on the weekly. And it's, it closes today in 5 hours. And here we have a low right here. And here we have a low right here. So again, the exact situation that we predicted, that we anticipated, that we discussed in advance has played out. Now we have bearish weekly divergence and we have bullish weekly divergence. And that bullish weekly divergence has so far led to a decent move back above the 821 or the 200, whatever time frame you're looking at. We've got the hard buy signal. We're back on top of the 21. What was the scenario we talked about? We need to close above the 8 and then we need to close above the 21. Once we do that, we're looking for the 821 cross. Once we do that, and just one step after another, one step after another, strengthening into our position. So do we get rejected at the 21 and close down here at 44,000 today? Probably. Maybe not though. Maybe we get rejected and then we still go higher after that. Maybe we get rejected and sell off massively and close a red candle on the week. We don't know what's going to happen. But what we do is, basically just look at probabilities and likelihood and then go off that. So that's what we have here. We now have a pretty bullish setup overall on Bitcoin, potentially, but could very easily, take the down road here. All right, so let's look at some of the trade setups that we laid out and see how those are looking right now and, et cetera, et cetera. So we obviously laid out this one on Ethereum. The entry was at 29.25. We had a maximum move, 9.7%, 10% to the upside. We hit our first resistance here and we're currently up like 6% on that trade setup. Obviously, we have higher targets for our breakout to the upside. We have already hit the 200 exponential. Next target is the 200 simple and the descending red resistance. Do we still get there? Maybe. Do we get rejected here? Maybe. We have all blue slope. We have found support multiple times with the histogram on that slope line. We have the hard buy signal. We are in the bullish control zone. We have complete bullish posture on all the moving average or on all the indicator oscillators. We have the 821 moving average across the upside. Still on the daily, well below the 200 exponential and simple. So we know Ethereum is much less bullish than Bitcoin is. Next, we have Bitcoin dominance. So we're seeing that same move that we were talking about in the Bitcoin dominance chart, where we have an aggressive sell-off, and then we bounce off of the 821 and find support at that level. And we still have a positive cross. We still have blue slope line on the TJD TDMACD. We still have our triple bullish divergence potentially playing out. We still have our potential resistance descending in red right here. Everything still looks exactly like what we've been discussing, what we've been expecting, and more likely than not, obviously this will go through the weekend, but more likely than not, I think we will close above this green slope line and then eventually have that move up to the top of the range at like 44, 45. Total market cap, this looks exactly like the Bitcoin chart, so we really don't need to go into detail here. It's literally exactly what I just said about the Bitcoin chart applies to the weekly crypto market cap. And I think our target was 2 trillion. Closing above 2 trillion is a big deal, which is also the 21, which we're like right at that level now. So we're at resistance. So Solana, we didn't really see a favorable trade setup on Solana just because it was such a tight range. But we basically discussed it coming back up to the top of the range and getting above this, key level. We took out the high right here, which is definitely a first sign, a good sign. The next target on, price level would be the previous high right here at 117. Obviously, again, we had bullish divergence on Solana that we discussed, triple bullish divergence, and then we got to move back up. But there just wasn't a big spread right here. And to tell you the truth, the main reason I didn't enter into a Solana trade is we missed my target by a couple pennies. The wick came down to 75.47, and my entry was 72.77. And I refuse to chase it just because, I'm stubborn or I make the market come to me, whatever it is. I'm not going to go the full 100. I go 50, the market's got to go the other 50. Whatever the reasoning is, I have my own reasoning. I missed a trade. It is what it is. So when we cross right here, this was a potential entry point at 88. Since then, it's had a nice little, about 15% move to the upside, and it's at resistance now. So not bad little move there, but we didn't have a favorable trade setup because we missed a nice entry point on that, unfortunately. So Avalanche. Okay, so Avalanche had a nice buy off of this right here. We had a potential target for an entry right here, but we actually broke down from support. So again, oh wait, I think we closed out part of our Avalanche. I think we did have part of an Avalanche position open, but it was open already. I can't remember if it was from back here. But when we broke down from this blue line support, we missed a potential entry back into it because it started looking bearish. So a place you could have re-entered at was like 75. The only reason I actually captured some of this is because I had a small position still remaining open, I think from the last time I took profits, which was through this range at the 0.5. So again, you could have entered into the trade at the 821 cross right here, would have had a nice move to the upside, about $9, about 12% or so. But again, the spread was too tight on this little triangle that we were basically building right here. We got to where we expected, but it just wasn't a favorable entry point for me based on risk reward. Now let's look at the trade setups we did have open and why we took them, etc. So here was Matic. We said that if the 821 cross happened right here and we broke out above that resistance, that we wanted to enter a trade with a 12% stop loss, telling us if we went lower than our previous lows, we wanted to be out of the trade, but we expected at least to push back up to the 618, 200 exponential in simple, the 0.236 in green, or the 786 in orange. So obviously we had part of that move right now. So at this point in time, this is one of those trade setups where, we're looking at a almost 4-to-1 risk reward ratio. The trade has now moved in our favor. So in my opinion, the next thing to do now is, and what I do is, I now move my stop loss to my break-even point. So we took our entry at 147. I'm going to move my stop loss to, slightly above 147 so that by the time I get stopped out, if we move back down to that level, I will be basically just break even. Or arguably, if that's also the support, which, it's possible we basically move up here, get rejected, come all the way back down to the entry point, and then find support at that, we can take a small loss. So we could put it slightly lower at like 142 or 139, so we're not using like a round number, and then that could be where we get stopped out. But we no longer are risking 12%. We're now from our entry point, if we say, and that's honestly what I would do in this scenario is where we get our entry back here, instead of now risking 12%, and instead of risking just coming back down and stopping us out and then moving in our favor, what I would do is I would just move my stop loss to like $1.39. And now I still will risk 5%, which still sucks if we turn a winner into a loser, but I'm not risking 12%. So I'm not turning, a okay winner into a, higher loser. But at this point in time, if you did what I did and take profits at like the key moving averages or whatever, that was a quick little 13% move in a couple of days. Still potential target upside 45%. But no, it's always nice to lock in some gains. So that's nice. The Luna entry had a nice little push up right here, but I mean, it's just about right back at the entry point. It is getting a hard buy. This still looks like a bullish reset in my opinion. We do have to be a little careful of potential bearish divergence we see between this point here and this point here. Bearish divergence. In order for that to be a third drive, we would basically just get one big green candle up and close like right at like 104. And in the meantime, we would have a smaller move on these indicator oscillators, and then we would have 3 drives of bearish divergence, and then it would follow with probably a breakdown to 200 exponential and simple. Now, is that going to happen? Well, there's still a high likelihood, especially over the weekend, that we do get a bullish weekend. Now, granted, it has not happened in a while, because all the crypto bulls are either all in or, have committed Harry Carry because they didn't take profits at 70,000 and, Bitcoin went down to 30K, or, whatever the scenario is. Maybe they, I don't know, whatever the scenario is, there's no Bitcoin bulls left. They're all dead. The cult is dying. There's no new members joining the cult. So, we need to have like a cult meeting where all the crypto bulls get together, and then everybody, look guys, if we want to win at this crypto thing, which is definitely not a pyramid scheme or, a Ponzi scheme or anything, each of us needs to recruit 2 new people, okay? So it doesn't matter if it's your grandma, it doesn't matter if it's your kids, you know, you got to recruit 2 people, okay? And I want everybody to bring back the names, phone numbers, and annual income of the people that they recruited, and then also, you know, what percentage of their investment portfolio you convince them to invest in crypto. And that's your homework for the crypto cult, so that we can keep growing this thing. But we're not going to call it a cult. We'll call it an investment. We'll call it investment technology. That's what we'll call it. Because JP Morgan's in it now, so it has to be good. They're definitely not just in it to make spread of people losing money in crypto or gaining money in crypto because they don't care if it goes up or down. But anyway, that's everybody's cult homework, okay? If you want to be in the cult, guys, if you want to keep growing this cult, we got to do it, or else we're going to end up looking like XRP, making lower highs, and, you know, basically just a dead coin. I mean, you want to be BitConnect? I don't think so. And again, I'm just joking. Please, anybody new to the channel, don't actually go and convince your grandmother to buy crypto. Please. Or do. I don't know. Do whatever you want. But don't do it because I said it. It's not financial advice. Please leave grandma alone. Leave Brittany alone. So theta now. Obviously, we laid out this theta setup with a 10% stop loss, 33% target to the upside. Already had a pretty nice and juicy move. And you'll notice that, you know, it was not complete luck that we literally laid out these targets and then immediately afterwards see a 15% move. We're doing it from key levels like an 821 cross or breaking through resistance, anticipating a short-term move so that we can have like a quick little scalp or a quick little swing or whatever. And again, we're seeing that same thing again. One drive, two drive, and then once again, this was basically the same low again. So sometimes we'll have regular bullish divergence. Sometimes we'll have hidden bullish divergence. Same with bearish divergence. Doesn't matter. Divergence is divergence is divergence. So when we see 3 drives of bullish divergence, we think there's probably likelihood that we're going to have a nice push to the upside. Now, is theta going to be able to get above this target, or is it going to roll over and fail? I mean, it doesn't look great right now. It basically moved right back up to that level and got rejected, but probably just because what Bitcoin's doing, not because theta is, you know, good or bad or ugly or whatever. It's probably just doing what Bitcoin does. So, you know, in time, I think it does what it wants to do as long as Bitcoin doesn't smack it down like the little bitch that it is. Because it's an altcoin, not because theta is bad. But again, you know, is it a bad idea now to leave your stop loss set at the, you know, over 10%? Or is it a smart move to kind of tighten that stop up a little bit, assuming now that because we've broken out, that if this area doesn't hold, if we lose the 821, if we lose the descending yellow resistance should act as support, that now we no longer want to be in this trade. So in my opinion, you know, we move the stop up pretty tight at like 283, 284, you know, and then that way we turn basically a potential winner into a potential small loser or a free trade that just doesn't work out for us, rather than turning it into, you know, it's not a big loss. It's 10.5%, but it's bigger than, you know, 2% or 3% or 5%. You know, and if it moved up even higher, if we took out this high right here at 3.366, then we would for sure, once we move above that, we would expect that to act as support, or we would expect this previous top right here at $3.06 to act as support. So then we would for sure move our stop loss up to our entry point, and then it's a risk-free trade. We're in the trade. There's no way we can lose. And if it goes to the moon, we're like, haha, bitch, we look like a genius. And if we get stopped out, haha, bitch, we took a shot and we were wrong, but it cost us nothing. And the goal is to get into as many trades as possible that there's no risk on. Like if you literally could go to the casino and be like, hey, I would like to play roulette. And the dealer was like, how much would you like to put on the line? And you're like, I would like to bet $100, but with no risk of losing my $100. And he goes, okay, sure. So put $100 on black. And if you're right, you get your $100 back, you know, plus another 100. And if you're wrong, you just get your $100 back. Yeah, okay. Well, that would put the casino out of business. So they can't do that. But in the markets, we can do that. And that's what we're going for every time. We want to have that $100 on black. And then if red comes up, we still get our $100 back. But if black comes up, we get another $100 plus our $100 back. That's our goal. And then once we have that happen, once we get that $100 back, that's us taking profits on a double up. And then we have that $100 from the casino that we can do whatever we want with, because that's not our money. That's their money. That's the guy standing next to us who just lost because he didn't have a plan. That's his money. So now we're going to use his money to keep playing the game. We're going to take our money back. and then we're either going to leave it in our trading account and do the same thing again, or we're going to take some of those profits and then we're going to buy, physical gold or silver or Apple stock or Nvidia or, whatever is in your retirement account, energy, or, maybe you want to buy utilities because you like the dividend, whatever it is you're choosing, that's completely fine. It's up to you. But that's the goal, is to just lock some of those gains in and then play with the market's money. So algo, we didn't do a trade setup for this, but you guys know exactly what I'm doing here. The same exact thing. So we have obviously a deep, MACD right here. And then we have bullish divergence between these 2 points. Price goes lower, oscillator goes higher. And then we have bullish divergence between these points. Price goes lower, oscillator does not go as low or goes higher or less low. Each time we get a hard buy, hard buy, hard buy, and then this time we get the 821 cross to the upside. So that is our entry point off of triple bullish divergence and, the hard buy signal. Now, if you didn't enter this ahead of time, you have to take it at the end, obviously the close above there, but you're still up 15% since then. What are the targets? Well, the previous swing high right here from the top was 29%, so still a little ways up there. And then we have the 200 exponential, which would be a target at 42.76. Then we have our 200 simple, it would be a target at $75. And then we can come back here and we can put some fib targets in place. And, obviously we could have easily done this ahead of time. I felt like we did TA on this not that long ago. Maybe I picked a different exchange on accident. We probably have this drawn. So here we hit the 236. So that tells us basically, as soon as we hit the 236 from top to bottom or bottom to top, it tells us, okay, we've now validated that this is a likely swing low. So we have triple bullish divergence. We've validated a likely swing low. So we probably sell back off here and then find support somewhere around 84 cents and then continue up to our next level, which just so happens to be the 382, which is also where 200 exponential and simple is. So this looks like actually a really nice technical setup right here. So again, theta, algo, it looks like our next target is going to be $1.19 and then probably after that $1.42, assuming Bitcoin doesn't just roll over and die right now. But we should be able to get an entry somewhere closer to like 86 or 83 potentially on like, a pullback finding support. We don't want to see this go lower. If it goes lower, it's going to look bad. But right now, everything but the daily 200 exponential and simple is bullish on this. We have green histograms. We're above the zero. We have blue slope line. 100% bullish. We have a hard buy signal coming out of the bearish control zone. We have the blue stochastic, entered into the bullish control zone up here. And obviously the knife is pretty strong. And obviously the blue is still above the pink. So maximum bullishness. And then here we have the 8 and 21 cross to the upside. That's our first step of bullishness. We are still below the 200 exponential and simple, and they both have negative slopes. So we're 33% bullish on moving averages. We're 100% bullish, 100% bullish. So if you take those and weight them all evenly, we have, a 300% potential, and then we divide it by 3 at the end. Well, we're 100%, 100%, and 33%. So we're 233% bullish. And then we divide that by 3, and that gives us our overall bullishness, which should be roughly math. What does that come out to? It's like 75% roughly. So we're like 75% bullish right now on algo, even though we're technically below the 200 exponential and simple. So we would still expect this to be a bearish downtrend, and we would still expect a rejection at these key moving averages or key Fibonacci levels. But based on our indicator oscillators and what's going on right now, this looks pretty bullish for now. But again, because we're 75% bullish in a bear market, the likelihood of this playing out is less likely. The probability of success taking a bullish trade in a bear market is less than 50% because we're trading against the trend. We're swimming around. The raft is floating downstream. We're floating downstream. We're kind of swimming upstream right now because we saw a cool stick and we want to go look at it. Or, there's a turtle and we like turtles. So we're swimming upstream to look at the turtle. Okay. But eventually we're going to stop swimming upstream. We're going to get tired of looking at the turtle. We're going to go back. We're going to get back on the raft. We're going to crack another, Bush Light or whatever it is that you drink. And we're just going to float on our inner tube downstream with the trend because we're lazy. We like easy money. In the words of Jim Rogers, I don't like to go chasing after trades. I let the market come to me. And when I see a pile of money sitting in the corner, I just go over and I pick it up. Okay. And I know that sounds super lazy and it's like, oh yeah, that sounds so easy. I'm sure there's just tons of money just sitting around in the corner. Well, that's what we do. Okay. And you know where I learned it from? Jim Rogers. And if you haven't read any of his books, highly recommend them. You know, especially right now. Obviously, anybody that read, you know, his book on commodities or bull in China or anything in the last, like, you know, 2 or 5 or 10 years, you know, well, 10 years. Yeah, that sounds right. Looks like a freaking genius right now, because we haven't been in a commodity bull market in 30 something years. And then you read hot commodities in the last couple of years. And, you know, that was one that I dusted off and read like, what, 2 years ago or whatever. And how long have I been talking about a commodity bull run for the first time in 30 years? How long have I been talking about a uranium bull run for the first time, you know, in 30 years? And energy, oil stocks, and all this stuff. And now we're talking about what? You know, gold breakout at 1300, we got bullish. And now gold miners is the 2022 trade. And pot stocks is the 2022 trade. And now what's happening? Explosive moves to the upside in gold miners. You know, most gold miners are up 40% already. And silver miners. Most pot stocks just went up, you know, 20 to 40% since the last stream when we laid out the trade setups that we're about to get to. And I wish I would have dived deeper into them. But you know what? Just ran out of time. So we only looked at the index. But it represents the pot stocks pretty accurately. We'll do a deep dive shortly, though, if we ever make it through crypto. So flux, the flux capacitor, we got the 821 cross right here. We laid out the potential setup, 6% stop loss, 33% upside. We already had the majority of that move. I mean, what was it? Like over 20% to the upside there. You know, and obviously you could have taken profits along the way. You could ride it out. You could do whatever you want. 16% move to the upside almost immediately. Same thing. We're looking at the same thing. Bullish slope, above the zero line, all green histograms, hard buy, Stokes postured correctly to the upside. We saw the knife come up here very powerfully to the upside and stop at a key fib level. That's a for sure take profit area right there. You know, and obviously the big trade setup was all the way up here to retest that high. The small trade setup, and you know, I lay out 1 trade setup or 2 trade setups or 3 trade setups or whatever. You lay out as many as you want and have as many take profit areas as you want. You're just going to use the same levels, moving averages or Fibonacci's or, you know, whatever it is. So you could have 100% taken profit at the 382 and the 0.5 and the 618 and the 786. You could do 4 trade setups. You could do 1,000 trade setups if you want. For me, I just lay out a couple to give you guys the idea so that you can functionally do them on your own and know where I'm coming from and why I'm choosing these levels. So again, this one is more bullish than most because it never broke below the 200 exponential and simple for any sustained amount of time and still has, you know, bullish posture on these. So again, we see our targets. Obviously, this has played out very well. Doesn't always work like that immediately afterwards. So game stonkaroonies, nice little short squeeze. This is the reversion to the mean trade we always talk about. So we broke down below the 200 exponential and simple, never got back up to the 200 exponential or simple moving average. Immediately fail, capitulated, went lower, came back up, failed again, went lower. We put in 1, 2, 3 lows. We see 1, 2, 3 drives of bullish divergence. We crossed above the blue slope line. We see a bunch of green histograms in a row above the zero line. Oh my God, look, same thing over and over working. 8 and 21 crossed to the upside right here. Didn't have a chance to get in that trade, obviously. Now, I mean, I didn't trade this at all, but I'm saying you wouldn't have had a chance because there was already too much bullishness by the time you get the hard buy signal right here. So you would have already had to have been positioning yourself for expecting this move or looking at the divergence. You know, it front ran the 382 slightly, you know, but in all reality, this is what we're looking for. This is the reversion to the mean play. So what is the next thing that happens after this? Well, there's 3 scenarios. It gets rejected, rolls over, and goes lower. It gets, you know, consolidates here for a little bit and then decides which direction it's going to go. Or it breaks through this level and then goes back bullish into the upside. So that's the 3 scenarios. But we know right now the 200 exponential and simple are telling us what? The fair value of this asset, not based on like actual real fair value, because obviously GameStop is garbage and it's completely useless and, you know, a garbage company. But the fair value based on the last 200 daily, considering we're on the daily time frame, exponential and simple moving averages. So right now this is a fair value based on moving averages. Obviously it's a complete ripoff. There's no way GameStop is worth $150. But that doesn't mean that you couldn't have just made, you know, almost 100% on the trade, buying the dip on it based on the bullish divergence or whatever. So what happens now? Well, we have to wait and see. I think more likely than not, it consolidates around here for a little bit, probably gives back some gains and does like a retest. Well, I mean, it arguably already kind of did, but if it breaks down again to 128, and that holds, it's going to look very bullish and probably goes up higher after that. But the truth is, what we're looking for now is we had consistently been putting in lower lows and lower highs. Now we have a higher high. So at some point in time, we want to see this come back down and put in a higher low. So it doesn't matter where the low's at, as long as it's above 78 or 77 or whatever. That's perfectly fine. Because we're going to have now, a low, then a high, then a higher low, then potentially a higher high, and then all of a sudden GameStop goes to the moon, all the stockeroonies, all the hodlers. This is definitely not just retards in retail just buying up trash useless companies, because of forums on the internet or like options or anything like that. It's definitely not that. I mean, this is a good investment, obviously. GameStop is great. I mean, I remember decades ago going into GameStop with a video game when I was a teenager that I just bought the night before for like, $60 and beat overnight, and it was total trash. And then being like, yeah, hey, I know this came out yesterday, and I waited in line at midnight for 3 hours to buy this at the release and beat it in one day, but I'd like to trade it back in. And they're like, okay, so you paid $60 plus tax. We'll give you $9 for it. I mean, great company, right? They're killing it on the margins, I'm sure. But what is GameStop now? I mean, they're garbage. They're trash. If malls are going to close down, where are all the GameStops at? They're in malls. If everybody's going to download all their video games, I mean, let's be real. It's a meme stock for a reason. It's a trash company. Speaking of trash companies, let's look at AMC. So what was AMC's big news lately? What was their big play? They bought a bankrupt gold miner. They're diversifying. It makes perfect sense, okay? Because what could possibly go hand in hand better for AMC, okay? You have your movie theaters, you have your meme cryptos, and now you have your bankrupt gold miners. I mean, and keep in mind, the gold miner has never made a profit. So if that's not literally the best investment you could make, a movie theater, they'll probably go out of business soon because everybody will just download movies or stream. Joke cryptocurrency that has the largest circulating supply in existence and needs to be 10 times the size of the entire crypto market before it's worth a penny. And that's everyone's target. And a bankrupt gold miner with extreme amounts of capital that it just bleeds out on a regular basis and has never turned a profit. If that's not a company that you want to invest in, guys, I don't know what is. Okay? So me and AMC, I'm the most bullish. You know what I did? I liquidated everything. I sold it all, and I'm all in on AMC, okay? I don't want you to follow my trade because it's not financial advice. But I mean, if those three things aren't compelling enough for you to just go all in on AMC, I don't know what is. I mean, this is amazing. We got a bankrupt gold miner that bleeds money. We've got movie theaters that are obsolete and definitely going away in the future. And on top of that, we've got a doggy coin, one of the biggest ones, literally by market cap. I'm sorry, circulating supply, not market cap. I mean, if that's not the best investment possible, I mean, why would you invest in a company that's making good money and deploying capital in a useful way when you can just get a little bit of all the worst investments all tied up in one? This looks great. AMC is the way to go, okay? And by the way, in case you haven't noticed, I'm being completely sarcastic. AMC is literally the trashiest of the trash, all wrapped up in one. It's like if you took, a dump inside of a dump inside of another dump. It's like a, what's that called? Human centipede of dumps, okay? It's like somebody took a dump and then someone else ate that dump and then dumped out that dump, and now they have a double dump, and then someone else ate that dump and then dumped out the double dump, and now there's a triple dump. So we have a triple dump of dumps, and we're just going to call it AMC, and we'll trade it on the stock market, and it's a great investment. So all in, obviously. But realistically, 821 cross right here, it probably still has some upside potential. It probably double dumps, maybe it even triple dumps. It's way all the way up to, what, 25, maybe even $31. So you know what? Hodl that AMC, guys, because it's going to the moon. I mean, it's in a bear market for sure, and it's a triple dump. And, I don't know why they bought the worst gold miner ever, but hey, it is what it is. Triple dump it on us. All right, so Made it through the cryptos, made it through the meme stocks. Let's look at the old commodities. Let me jump over in chat real quick, see what you guys are saying. Make sure to smash up that like button. If you're all in on AMC getting that triple dump, double dumping, let me know in the comments. Where are we at? I don't know where I left off. UniQ says... Yeah, okay, I think that was the older one. Two Idiots Go Sailing says, oh, you're killing me. Yeah, I mean, I try to keep it light around here and have a little fun with it. So, plus it's Friday, so, you know. And this is definitely like a, I don't know what this is, a rated R stream. So even though it's during the middle of the day, this is for adults only. Because I've got a foul mouth, and I make weird analogies that are inappropriate. And whatever the opposite of politically correct is, that's me. I keeps it real. Eric Wynn says triple dumps, LOL. Exactly, man. It's all about the triple dump. Okay, so let me just wet my whistle real quick, and then we will keep ripping. All right, so we've got gold. Obviously, was able to avert the cross, which is good. Honkiness says you're wanting the term nesting dumps. I don't know what that is, but if it's anything to do with what I'm talking about. I mean, I'm not Googling it because I'm afraid of what I'll find. Some search history can't ever be erased. So we've got gold. Obviously was able to avert the cross. Bunch of red histograms off the hard sell. You know, we're expecting a pullback. We pulled back to a key level. This was the area we were talking about finding support, and we did. The next area, if we go to the downside for support, is 1865. If we go to the upside, obviously, you know, potentially new all-time highs. What we're looking to happen, though, is this scenario. Me just grabbing random stuff on accident. What we're looking to happen is this scenario, where we basically have now a high, and we have a low, and now here we are at the heart line of that move, but we want this to just develop into a descending channel, and then we want that descending channel to actually form the beginning of the handle, and then we break out of the handle eventually bullish. That will actually be like a rounding pattern, and it will turn into our massive cup and handle pattern. So I do anticipate, typically what you see is with the cup and handle, typically what you see, and it does not have to happen, because you can have something be much more bullish and then it won't hit your targets. What was I about to do? You can have something be much more bullish and it won't hit your targets, or it can be much less bullish and it, you know, goes deeper than your targets. But typically with the handle, you want it to retrace 50% of the move from the bottom to the top, or the top to the bottom in this case, because it was basically a perfect double top. So we would expect our handle to be roughly somewhere around there, and we would expect it to roughly come down to the 50% mark. So this would be our rough handle, and then when we zoom out here, we'll see a giant cup and then, you know, a handle. So basically, we would expect it to do something like this. You know, and it does, which one? It doesn't have to do this, but this is typically what happens. We'll chop around a little bit, then we'll move back up, we'll get rejected here, we'll come back down, we'll chop around here, we'll come back up, we'll chop around here, you know, and then eventually we'll chop around, and then we'll finally get that breakout, and then that will actually start to round out, and that will make the handle, you know, when we look back at it. So we're looking for something similar to that. It doesn't have to be perfect, doesn't have to happen exactly like that, but typically that is how it plays out, you know, with a cup and handle. It's almost always a descending channel that breaks out and then forms like more of a rounding pattern. So that's what we're looking for with gold. And then next we have silver. Silver looks okay. It was able to reclaim that heart line, which is good. Still above the 200 exponential and simple. We're seeing definitely some weakness in gold and silver. No divergence or anything, but we're below the slope lines now. And typically when we break down below the slope line and then we come back up to it, we almost always get rejected. So similar to like here, we break down below the slope line, we try to come back up, we get rejected, go lower. Sometimes, you know, we'll break below it, it will actually flip red, and then we'll break back above it again, and then we'll go lower. You know, it doesn't always look perfect and technical, but that's probably what's going to happen. Let's be real. A lot of this is fear. This is a fear trade based on Russia. Now, long term, I'm still very bullish on gold and silver. But again, the time horizon on gold and silver and most commodities in general is much, much longer than, you know, a stock or a crypto. Gold silver ratio, again, it looks like we're going to close out this week below the 821. So it looks like the 8 and 21 are going to cross back to the downside. So the same way I got very bullish on gold right here in relation to silver, I'm very close to getting bullish on silver in relation to gold and saying this has topped out and I was wrong. We're actually having a shallow retrace. So we hit the 382. I was expecting either a 382, a 0.5, or a 618. So it's perfectly fine if we top out right here and then go lower and we don't hit my target. This would be the neutral target, the 0.5. This would be, obviously the more bearish target or bullish target, depending on, if you're bullish or bearish, depending on if you're talking about gold or silver. So at this point in time, it looks like we hit the 382 and the 200 exponential and simple moving average perfectly, broke down from them, and now it looks like we're getting ready to roll over, telling us silver is going to gain value compared to gold. If this continues to sell off and we start trending down on this, it tells us that we're probably going to see silver accelerating to the upside much faster than gold, because it's very unlikely that silver would gain strength in comparison to gold if we're going down. Typically, silver is more volatile to the upside and to the downside. So if we're selling off, we would expect this to go up. If we're pumping to the upside, we would expect this to go down. Now, sometimes in early cycle, we'll see gold outperform silver, etc. Wait, did I say that wrong? If we're selling off, we should see this go up. If we're pumping, we should see it go down. I think that's what I said. CCJ, Cameco broke out to the upside, consolidating here. We're seeing some weakness in energy, which isn't surprising. Again, you guys know I was very bullish on uranium, but right now I really think we're looking at a potential top on like uranium, oil, nat gas, etc. May have already put them in, etc. So at least temporary, not like we'll never go higher, but I think we're very close to at least a temporary top. So THCX. Okay, so this was the first of the pot stocks, and this was a trade setup we literally laid out. I think we did. Isn't this one? Yeah, okay. This was a trade setup we laid out on last stream, which was on Wednesday. So this was our entry at the 821 cross right here, at the 886 after breaking down from it. I told you guys, building positions in pot stocks because they're just absolutely beaten down. I was very, very bullish on pot stock. We have triple bullish divergence. We're above the slope line. We bounced the blue slope line. There's no secret to anyone here, what's happening. But from that entry point, we had an immediate move of 20+% and a gap up. Really, it was just after hours trading, and then we came back down and filled the gap. So what happens after this? Well, I don't know. We'll have to wait and see what happens. It's obviously up much less now, but it took out this previous swing, which is good. It's definitely a start, but does the reversion of the mean play out completely or not? I don't know. So on this one, and again, you see news coming out afterwards, and it's like, oh, this company's buying this company's debt, or Congress is going to pass a bill to try to legalize marijuana federally, or turns out that smoking pot is, good for you because then you eat more food and brownies are suddenly like healthy. Like whatever the news article is that they like put out, it doesn't matter. Because how did we know it was going to happen ahead of time? How did we know suddenly Congress was going to try to pass a bill? Well, maybe Congress was passing the bill and that's what pumped it up and the technicals had nothing to do with it. Sure, maybe that's possible. Maybe it's exactly what we said where, the Dems are getting absolutely destroyed because all of their garbage policies are complete trash and now they need to find a way to shift the narrative and earn extra tax dollars so they can waste them on random bullshit or maybe get favorable votes from people because they're like, hey, we're going to legalize weed. So, all you young people that love smoking your ganja, get out here and vote for the Democrats because Republicans are conservative and they hate weed. So do you want to be a criminal or do you want to be a Democrat? Take your pick. Whatever the narrative is, that's why we're bullish on pot stocks. Not only are they just absolutely destroyed and, the valuations just don't line up with the actual valuations of the assets based on book value, etc. But, when we add up the narratives, the fundamentals, the technicals, the fib levels, the moving average crosses, whatever, they're all pointing us in the same place. And that's the upside. Now, do we get to move to the upside and then it rolls over and goes lower? Probably. But, we're running out of time. These things are at, in the words of Queen Kathy, they're in deep value territory. Let's remember, THCX, which is just a, one of the ETFs we look at, YOLO, THCX, and then we'll look at the individual pot stocks as well. It was at $31 and, it came down here to $6. So, I mean, would you call that deep value territory? I mean, is the industry of pot stocks just going to go away? I mean, it lost 80% of its value in the last few months. So, deep value territory, yes. Still in a bear market, yes. Technically put in a higher low, so that's good. But we'll see what happens. You know what I mean? Definitely want to be taking profits on some of this stuff before getting like too greedy here. So here's Hexo. Obviously, been buying Hexo and discussing that. That was one of the ones someone presented an article. I think, was it Tilray came in and bought a bunch of Hexo's debt. We were talking about Hexo specifically has, it was like it was trading at less than 50% of its book value. So it's like, okay, do you want to buy this dollar? That's our vending machine, analogy from last stream. Do you want to buy this dollar from me? Well, how much you want for it? 50 cents, because I want to use the vending machine and the dollar slot's broken and I really need some Cheetos. Deal. I'll take a 50% discount on the company. So since then, obviously, since the 821 open right here, 52% is the target, and it's already up over half that, 20-something percent. So that's great. And I believe the options, oh man, I think the options were set at like 80 cents for that debt purchase. So I would expect the price to get up to 80 cents. So next we have Sundial, because now the market's going to look at that and say, oh, okay, well, that's the target, obviously, for the company. So they would obviously, that's where the price is going. Same way with like the Blizzard deal, when they come out and say, hey, we're going to, buy Blizzard for, whatever it was, $82 a share. And then immediately the price just jumps to $82 a share because the market's like, oh, that's what it's worth, or they wouldn't have made the deal at $82. So Sundial is next. Another one, obviously put in a nice higher low, this one was hanging on closer to the 200 exponential and simple, but still getting crushed. But, I mean, look at this. We drew this chart, I don't even know how many, months ago when this came down here to our target, and which was the 236 of the macro from the all-time high to the low right here. I mean, I can't even remember what stream it was on. It was so long ago. But we literally had this target in place forever. And, I mean, look at how technically this is trading. Look at this wick. It literally comes down exactly and tags the 236 within, pennies. So if ever there was an opportunity to enter into this, I mean, that was it. And since then, the trade is up. It's almost up 100 and, I mean, just from where it's at right now, not even including, this giant green ridiculous candle. It's up over 94% since then. It's very close to hitting the, 177% target. I mean, it's still a little ways to go there, but back above the 200 exponential and simple. So this one actually looks better than most. And then we know we actually have bigger targets than that of 400%. And now all of a sudden, it doesn't sound so crazy. Before it was like, oh yeah, right, 400 something percent. Yeah, I bet. Nobody likes pot stocks. They're garbage. And then 3 days later, so Tilray. So this is one of the ones I actually already took some profits on. Does it go much higher? Probably. It probably does. But I mean, it was up substantially from our entry. So, I don't know if I put a trade set up on this one. Okay. Here it is on this one. So basically the trade setup at the 821 cross was at 562. The stop loss below the previous low, which again, to tell you the truth, on a lot of these pot stocks, they're in such quote unquote deep value territory and been putting in this bullish divergence and just getting absolutely destroyed for so long in a market with, everything is completely overpriced and these things are trading at a discount, to book value. Even if we did come down here and go lower, I would probably just be buying more. Not necessarily actually getting quote unquote stopped out. But that's where I would be like, okay, this trade is going against me. I need to make that decision one way or the other. But that was almost 3.5 to 1 risk reward ratio, 13.74% with a 50% target to the upside. Guys, no surprise here. I already took profits on this. Okay? I took profits on this. Does it go much higher? Probably. But I'm not going to be mad that I took profits at almost 50%, well, over 50, right around 50%, let's say, to the upside on this. Now, does it go up the rest of the way and get another, 85% total and retest the 200 exponential and simple? Probably. I mean, does it go much lower after that? Probably. I mean, or at least lower or retest the lows, eventually come back down. Maybe it comes back down and retest 521, but puts in a higher low, and then we have an inverse head and shoulders, and then we break to the upside. I mean, I don't know what's going to happen. It would probably look better if we had a little more of a solid neckline, but, it's no surprise that we've been looking at pot stocks. I told you the trade of the year this year, in my opinion, was going to be the existing energy trade, which obviously has played out extremely well, and then what? Pot stocks and gold and silver miners. So I'd say so far we're just absolutely fucking nailing it. And what was the worst trade ever, in my opinion, this year, and the absolute most garbage asset in all of existence? Bonds. Reward free risk. Trash. And we'll look at them in a minute here too. So ACB, same thing. We're at resistance on this one. A little more technical. Didn't quite get Tilray is lightweight a meme stock, so we got to be careful with that one. I mean, it realistically is. So obviously we were never expecting this to come down that low. I didn't just delete the chart or anything. But obviously, this would be invalidated at this point in time. This should be our low, and then we'll potentially go 1 through 5 from there. This was just a hypothetical scenario that we drew out for ACB, assuming it put in a higher low, which it didn't put in a lower low. So on a longer time frame, we'd have to look and see, is there bullish divergence? Is there bearish divergence? Does this look good? Does it look bad? But the actual entry point with the stop loss below the low right there, it was at 19% stop loss. So not great, but you can just change the position size to be smaller because the upside target is so good, 54%. You're basically still looking at 2.5 to 1 risk reward ratio. Now that's the retest of the previous low. No, what was that the retest of? Oh, you know what? Sorry, this chart actually, like I said, it's been a while since I drew this and did one on stream with this. Okay, yeah, so that's our swing high right there to our low right here, and now we're tagging the 236, which essentially would act as a neckline. So this is that hypothetical scenario again, where we could potentially see an inverse head and shoulders develop, where we basically have, our neckline right here. That's our left shoulder. That's our neckline. That's our head. That's our neckline. Now it sells off right here, comes back down, to our entry point, or maybe a little shallower, something like that. And then we see this right here happens. And again, this hypothetical doesn't have to happen, but typically this is how, things will bottom, or, oftentimes things will bottom like this. So this is what we're looking for in advance. Some sort of higher low, some sort of bullish divergence, which we've obviously been seeing all throughout the pot stocks. And then we want to develop, basically a measure move target to the upside, which would be from the head right here to the neckline. And then assuming we get that break, we would expect the target to take us much higher than 200 exponential and simple, which just happens to be the 0.5, the 50% move of all the way to the upside. You know what? I'm actually going to get rid of this because we don't need it anymore. We can redraw it once this actually looks bullish. But I want to use, what do I want to do? I'm just going to use the 5-wave Elliott tool, even though that's not necessarily what we're looking at right now. But basically, from this high right here, we're looking at basically, our first sell-off and then our retracement of that. And then we're looking at, this is basically a double bottom lower high. But this could be our second sell-off down here. And then it comes all the way up to the 0.5. And then we could actually see another wave to the downside, new low. And that would not be surprising. But we're looking at basically a retracement of, and it could be an ABC, it could be a 1 through 5, it could be, anything. I'm just using that tool to actually just draw is all. But it's a 50% move down now. The, potential target to the upside if the inverted head and shoulders plays out. So right now the key levels to watch are the 236, which we just tagged perfectly. Then after that, the, target was the 200 exponential and simple and the 382, which is $6 basically. And then the target after that is the 0.5 Fibonacci retracement of the move, 50% of the move down. We move back to the upside, and then we probably go lower if we top out there. And that will be also the measure move of the inverted head and shoulders. So that's what we're looking at. Again, we see bullish divergence developing off of, some key levels, and then, potentially have nice moves like this to the upside. And then the last one we're going to look at is CGC. This one has just been getting absolutely destroyed. But I do like this one because it has a longer time frame than most of the rest of them. Most of the rest were like coming out in like 2017, etc. So they don't have like the previous amount of history. I don't know what I have on this chart. Okay, yeah. So the last time we drew this was when we were, I think, back. What did we do? We did a deep dive on this one. Okay, so we have our target down here. Okay, so yeah, so we have our green target and our blue target to downside, but we're looking at this macro inverted Adam and Eve top. So we have an Eve rounding top, then we have an Adam, sharp like V top, but it's basically just a double top pattern with the previous all-time high as the neckline, and that was holding. And then we know that if we broke down from there, we have from the bottom right here to the top right here, and then we have our Fibonacci extensions to the downside. So we know the initial Fibonacci extension, the 1.236, which actually is what we hit here in green after we broke down from support, tried to come back up, I retest it, failed, hit the 1.236. Then that was the entry, was a 10% stop loss if we went lower, and then we were probably going to the 1.382 or at least back down to 502. So we would just re-enter lower, and target to the upside was 54%. So 5.43%, 5.43x risk reward ratio. So 54% move, hit that almost perfectly too. I mean, look at the reaction rally off the 1.236, almost exactly to that target. Next target was back to the blue resistance, which was 79%. And depending when we get there, roughly the 886 or 200 exponential and simple. Next target to the downside is the bottom right here. Matter of fact, let me change this color. We'll make this one white so it stands out a little bit more. But that was our bottom from right here and, previous support. And then that also lines up right around the 1.382. So somewhere around there for a potential target. Is the macro bottom in? We don't know. Is this just another dead cat bounce? Probably. Probably goes much lower. Doesn't mean we can't capitalize on some entries and some scalp trades in the meantime, though. So let's make this one. I'm going to make this white for a second, too, just so it kind of shows up clearly. And, obviously that lines up perfectly with the 618 as well. So, all right, so let's move this out. We'll go thick and juicy mode on it. Make it a 3. I'm going to get rid of this because we don't need that anymore because that's where the 618's at. So now we see basically from our bottom right here to our top, we came down initially, hit the 236, got like a dead cat bounce, came down to the 382, bounced all the way up, put in a lower high, and then got rejected. And now we went all the way down to the 0.5. Again, overshot it. This isn't trading super technically, which sucks. We want to see things trading as technical as possible. So is this likely to be the macro bottom off of a non-technical level? I mean, it's possible. We did the same thing right here at 382. We're just seeing exaggerated moves to the downside. I would obviously much prefer it hits the 1.382 fib extension and the 618 retracement, but it doesn't mean it has to. This could be the macro bottom. Where we're at right now, you're buying the 0.5, and then sometime in the future, you bought it at, $8, and then it goes back to the previous all-time high. It's $58. So, I mean, does it do that? I mean, I don't know. Maybe it goes bankrupt. Maybe it goes to $1,000. But that's 656% move after a 50% drawdown. I mean, it's not bad. So we'll see what happens. Obviously, we've seen some nice bullishness, some nice moves. I told you I took a little bit off the table here, just not to be greedy. Because when we see a big move, suddenly, 20%, 40%, 50%, 70%, I'm not greedy. I like to just lock in some gains. And then we can buy back into strength. But this is still very bearish. We're very much below 200 exponential and simple moving average. Very much in a bear trend. Barely crossing the 821 to the upside. Last 2 times it got rejected. We don't want to just end up getting stuck in a trade when we're up massively. I mean, look at this 821 on the monthly. It's crossed the downside and just getting destroyed. We're in the bearish control zone, basically at 0. I mean, look at this. So is it surprising we got a bounce at 1.81 on the stochastics? I mean, it goes from 0 to 100. So we're in the bottom 1.8, percent. We're in the 98.2 percentile, lower than we've ever been. Do we go much lower? I mean, we probably do. Looking at this chart right here, and you were like, hey, you think this is the bottom? I would say, I mean, probably not. Probably not. We're probably just finding a little bit of support right here before this thing just completely melts down. I mean, this chart looks like total trash. Looks like absolute garbage. I mean, it's better than like XRP or something like that, but not by much. Not by much. I mean, this looks terrible. I mean, you're literally on a monthly trying to pick the bottom on this thing. You're trying to catch a monthly knife on something that's just completely melting down. Which is okay. I mean, for a scalp or whatever on a shorter time frame, but I don't want to be like over quote unquote investing in something that's just consistently putting in new lows. But I mean, would I be surprised if it shot all the way back up to $20? No, not at all. You know, that's why we're taking responsible levels and building a position and, you know, taking some gains off the table on the way back up, you know, until we're back above. And we can't even confirm back into a weekly bull market till we're back above 25.88. We can't confirm back into a daily bull market till we're back above like $13, $14. So that's almost like, you know, another 60, 70% from here. So do pot stocks keep just ripping to the upside and we're just super bullish now? Maybe, but maybe not. We got to be smart about it. Got to be smart about it. All right, let's look at some traditional stuff here too. It's Friday. We got that wrap up. If you are currently watching, let me know something in the comments. You know, what's your, where you at location wise, or what's your favorite asset right now? What's been your best trade of the year? What are you the most bullish on? I don't care. Just something. Anything. For the algos. TNX, obviously just going absolutely parabolic. I mean, so if you're a bond bull right now, you're a moron. An absolute moron. I mean, you could arguably say, well, yields are probably about to top out and bonds are probably about to bottom out temporarily. But you got to be an absolute retard to be bullish on bonds right now. I mean, what everybody's like, don't fight the Fed, don't fight the Fed this, the Fed that. Sure, I totally agree. So why now, when the Fed says it's going to hike rates like crazy, all of a sudden are people like, yeah, but they can't hike the rates because the debt, and they'll just be they won't be able to service it because it's too much of and there's no taxes, and then the bankrupt the government, so the yields can't go up. Don't you get it? Oh, okay, retards. So if the Fed literally says we're going to raise rates and gives you the plan, and they say this is what we're going to do, and we know every other time the Fed does that, the market responds in the direction that the Fed wants the market to respond. Now all of a sudden we're just going to say, yeah, but they can't raise the rates because the debt. You don't think that they fucking thought of that? You don't think that the 600 economists working at the Fed know about that? You don't think the Treasury knows about that? I mean, do people even understand how the Fed works? Do people even know anything? Or are they just full on retarded? It blows my fucking mind. Okay, let's talk about something real quick here, and then we'll rip through some TA because I don't want to go too long in this stream. What are we at right now? Bum, bum. I mean, we're in it. We're in it to win it. Hour and 53. Okay, yeah, I won't go too long on a tangent right here, but you know, I know you guys love the rant, so. And then I'm also going to drop a knowledge bomb mid-rant. So here's the thing about the Federal Reserve and the Treasury, okay, without going into too much detail. Okay, the Federal Reserve is obviously not a government entity. Most people know that now. The Federal Reserve has a cap on the amount of profits that they're allowed to make on the interest of the loans that they basically give to the government. So the Treasury basically issues treasuries that they have to pay loans on. So they basically say, hey, I want to take out a loan. And then the Fed goes, okay, great, I'll give you a loan. Out of thin air. Because there's nothing, okay? So the Treasury goes, okay, we're going to issue these treasuries at 1%, 3%, 5%, 1,000%. Okay? For this example, let's say we're going to issue a 1-year duration treasury at 100%, okay? Because everybody's like, they can't raise rates to 2.5%. It will bankrupt them because the federal debt, and it'll be in the hundreds of billions, and that's more than the defense budget spending, and the government will go out of business. So you're dumb, retard. Okay, so now let's use actual statistics and facts, and then we'll prove these morons wrong. Okay, so the way the Federal Reserve works, and you can research it if you want to on your own if you don't believe me, but I promise you I've put in the work. The way the Federal Reserve works is they are allowed to make so much profit after paying off all of their expenses. So they pay off all the people that work there and all their operating expenses, all their bills get paid, and then they're only allowed to make a small percentage or dollar amount in profits. And then the remainder amount of that money from the profits, from the interest rates, from the loans that they gave to the Treasury, that they made out of thin air, off of those treasuries that were issued that the Fed bought, the interest that the government pays to the Federal Reserve gets cycled back into the Treasury because they max out their profits. So if the Fed buys treasuries from like treasury back, obviously like bonds, if they buy bonds that the Treasury makes with 100% interest, okay, but they're capped at, I can't even remember what it is. It's like, a few percent. They're capped at a couple percent or a certain amount that they're allowed to make in profits. They then take the other, let's say it's 2%. So the Treasury borrows $100 trillion from the Fed by issuing, a debt note in the form of, a Treasury. So then the Fed says, okay, we'll buy that Treasury. And they're like, yay, we just bought a $100 trillion, bond with a 1-year duration. So at the end of that year, the Treasury will owe the $100 trillion in interest because it's a 100% bond. But they can't ever do that. They'll go bankrupt. Okay, so what actually happens, though, is the money just gets rolled back into the Treasury. So the Fed pays its bills, keeps its little slice, its little itty-bitty slice, couple percent, and then it just rolls back the other $100 trillion in profit. So maybe it ends up keeping, its little 1 trillion or 2 trillion or whatever it is. And then the other 98 trillion in profits gets rolled back into the Treasury. So why? There's so many, we have laid out so many specific examples of how the government can raise rates as much as they want and be absolutely fine. We talked about how the government can, prior to raising rates, the Treasury and the Fed can get together and agree, okay, we're going to issue a, America's great and it's the best and we love it and things are just going awesome bond. Okay. And we're going to make it for $100 trillion and we're going to have it be a 100-year duration at 1% interest. And then they just take that and they go, okay, we issued it. Does anybody want to buy this? And people are like, fuck no, this is garbage. It's trash. And then the Fed goes, yeah, we'll take $100 trillion bond with a 100-year duration at 1% interest. That's a great deal. And then they say, awesome, glad we have a buyer for it. And then the Fed comes and buys it. And then we have $100 trillion financed for the next 100 years at 1% instead of, buying a bunch of like 3-month duration or 1-year duration or whatever bonds from the Treasury. The Fed buys one single long duration bond. And then all of a sudden, Jay Powell and Janet Yellen get together and, they have like the grossest like slow motion movie scene kiss ever in all existence. Their little like lizard tongues interlock. And then like, when they zoom out, their eyes are completely black and, it's all pupil. And, they show their true lizard form only for a moment. And I'm just joking, by the way. I'm not like a lizard person, center of the earth, whatever, conspiracy theorist. But regardless, after their lizard tongues, like the little forks, like kind of touch each other and kind of like, and then they like stop and they look deep into each other's eyes for a second. And then afterwards they say, do it. Do it. And then what happens? They raise interest rates to 15% to destroy inflation. So, oh my God, the federal government is funded for the next however many years they can waste $100 trillion in, maybe 2, 3 years, 10 years, I don't know, at 1%. And then, oh my God, they just took out long duration, treasuries and, oh, look now. And then they can do whatever the hell they want. So between those two scenarios, anybody that says, don't fight the Fed and they can print money and all this stuff, if you still think they can't raise interest rates because the government will go bankrupt or default or will have to go into hyperinflation, just don't ever watch the stream again because you're not taking the time to put in the work to educate yourself, to understand how simple it is for the people that write the rules, make the money, print the money, do the stuff and the things and whatever they want. And most people have no idea what we're even talking about right now, nor would they ever spend the amount of time to understand it. Because one, they don't give a shit, or two, it's impossible for a regular person to ever even understand this, because the amount of work they would have to put in to understand what the Treasury is, what the Federal Reserve is, and then what any of this other shit means, bonds and treasuries and yields and yield curve inversion. The amount of work that would have to go into even understanding this would take someone so long that by the time it happens, it will have already happened, and then it won't matter anymore. But that's two tiny little scenarios that literally just completely destroy the whole narrative that the Fed can't raise interest rates beyond a certain amount. All they have to do is issue a long-term treasury, or just doesn't matter because the Fed only keeps so much money and then they roll the rest back into the treasury. So either way, either one of those scenarios or both those scenarios combined, and anyone that says they can't raise rates is, an absolute moron, explicitive, deletive, whatever, all the swear words in the whole world, and the, trifecta of the poop that got ate and then pooped out and then ate again and then pooped out the poop that was eaten and then pooped out. Because that's their brains. They don't have any brains. They just have that. They have the trifecta of poop inside of their head, and then somehow their body still functions. Because they're dumb. They're dumb fucks. So anyway, now that we disproved the entire argument of literally, everyone else but us in the entire space, let's move on. And if you don't believe me, you can literally find any of that information. You can look up what the percentages is, and then you can let me know when you do the work. I just can't remember, but I know for a fact that's how it works. You can look up in history when countries have issued war bonds, or, America's Great Bonds, or whatever it is. Like, if you're a true patriot and not, a traitor scumbag bond, whatever you want to call it, they try to make it something great, but that's all it is. It's just a long duration, like, bailout before they change policy. So, look at this. How can you be bullish on bonds? You gotta be a moron. This thing is going absolutely parabolic. We're hitting targets left and right. We're at the 886. This big red box was our target from way back down here. So we did it. We hit the target. We're there. The question is now, do we overshoot? Do we go higher? Do we make it to 200 exponential and simple? I don't know, but this chart is so bullish on a monthly time frame. We're still below 200 exponential and simple, but it's so bullish. It's so bullish. Let's look at the TLT chart. This chart is so old. I haven't even brought this up on stream for a while because it's so trash. We don't even need to look at it. The last time I think we looked at it was when we broke back down below the 200 exponential and simple, and I said, that's it. Look out below. Bonds are going to get absolutely wrecked. Can you imagine being in, I think actually we did look at this in the group, but not on here. Can you imagine you're locked up in a bond with, a large chunk of your retirement, and over the last, year and a half, it's down 25%, and you're locked in at, 2%. So you just lost 12 and a half years worth of payments in principal. If this isn't the worst possible investment that you can have, I don't know what it is. The end of a 40-year bond bull market. I don't know what we have on here. Okay. So this is our bond bull market. This is the TLT. So it's not actually the bonds, but it, obviously trades with the bonds, but not the yields. This is the actual 20-year treasury tradable version. Let's go to a longer time frame. All right. So we have our ascending channel. The bottom of the channel lines up with the 200 exponential and simple. Heart line getting clear interactions. We have a parabolic blow off top out of it. That's that Rona dump. Failed to hold support. Come down. Put in this giant head and shoulders, which I actually put in this right shoulder before we ever even made it. I put the target for the right shoulder in place when we were back below these levels, anticipating that we could potentially get a head and shoulder pattern. And then we actually came down, consolidated for a little bit, and then finally hit the 0.5. And you guys will specifically remember, those of you that have been around for a while, I said I didn't think this had topped out yet because it's trading so technically, it would blow my mind if we didn't come up and tag that 0.5 exactly, especially in something like the bond market that's completely driven by like whales, bots, algos, just market makers, massive amounts of money. And then I specifically talked about in the group how big the bond market is in comparison to the stock market, and how literally the United States bond market is, I can't remember what it was. It's like $46 trillion. $46 trillion. And I mean, it's like literally one of the largest asset classes in existence on Earth. So the amount of money that is being lost right now compared to the amount of money that's being gained in the stock market is a joke. It's an absolute joke. I mean, they're not even close. They literally do not even compare. And the amount of liquidity in the bond market in comparison to the stock market is like an absolute freaking joke. So what's happening right now in the bond market, this complete meltdown in the bond market is being completely underestimated or just neglected by anyone that understands, financials and technicals and how markets work and the utter size of these markets. I mean, this is like the difference between, I don't even know what's a good example, between, a speedboat and an aircraft carrier, okay? The bond market is an aircraft carrier, a gigantic floating, island, and then the stock market is a speedboat, or Bitcoin is a speedboat, or, the entire crypto market is a speedboat, or, whatever various asset class, gold, whatever it is. They're all just little boats, just swimming, zipping around. And then there's a giant aircraft carrier, okay? And right now the aircraft carrier is sinking. So no matter what happens, maybe Bitcoin hits a wave and it goes up a little bit, and then it goes back down and it's riding around, and then gold goes up 12% and boom, boom, it's jumping around, it's following Bitcoin. They're ramming into each other or whatever. Whatever happens between those doesn't matter. They're tiny little boats. If one of them smashes into the side of the aircraft carrier, they won't even leave a dent. It'll be a little scuff in the paint job. The aircraft carrier right now is completely melting down. It's sinking. And everybody's focusing on, the cryptos, this. This is what we need to focus on. This is so damn important. That's why the rates have been, we've been looking at the other side of the same coin, looking at interest rates all the time and talking about how the rates are going to go up. And we're talking about a 40-year breakout. This is the other side of that chart. This is the bond market. Obviously this doesn't go back as far, but, this specific chart, because it's the actual TLT, not the bonds themselves. But this is basically like paper trading bonds, like a digital representation of trading a 20-year treasury, basically. So what's happening right here is, we have this basically like rounding bottom in green, and we're at that bottom now. We're at that target to where we would expect to potentially find some kind of support. Now, maybe we don't. Maybe we don't find support, and this just melts down. And we know that the breakdown of this head and shoulders pattern is likely, we've already broken down from it. We're 6 days away from closing a monthly below here of this complete meltdown of the bond market. I mean, just complete destruction of capital. This thing is back at 2012 values right now. That was the peak from 2012. And that's what this is. So you're like, yeah, but it was up by this much percent, and you're dumb and you're just cherry picking. Because yeah, sure, if you pick the top, it's down 25%. But okay, sure. Okay, let's do it this way then. What if we just say, hey, we invested in June of 2012 in bonds, and they're a great investment. Okay, and now it's over 10 years later, almost 11 years later, okay, and you got paid garbage. You got paid trash because, your actual real rate, was basically zero or negative, or maybe, whatever, slightly positive, and you had it locked up for the last, 10 plus years, and you got nothing. You didn't have any appreciation of your capital. And then on top of that, you made pathetic little coupon, interest payments, because it was probably either negative or barely positive, if that. So we just wiped out, 10 plus years of value, or whatever you want to call it, in the bond market in the last couple of months. So sure, you want to cherry pick from the top, we're down 25%. You want to not cherry pick from the top, and it's like, well, we're just flat. We're not doing bad. We're just flat for 10 years. That's not bad, right? Bonds are a good investment for 10 years. The 40-year bond bull market, in the last 10 years, you made nothing. Yeah, that's good. That's a good investment because it's safe. People are so stupid. Blows my absolute mind. If this continues to melt down, if we come down here and we touch the 200 exponential and simple, if we come down and threaten this previous low right here and touch the 200 exponential and simple, that's another $10 down on these things. I mean, that is a complete meltdown, an absolute meltdown. And this tells me there's nothing on this chart on a monthly time frame that tells me that's not going to happen. Look what happened here. We melt down, we bounce, rejected, and then we put in a higher low. And then we go higher. That's good. That's what we want to see. But in order for that to happen, in order to print that divergence that we did right here, where we put in a low, and then we come down, put in a lower low in price, but we put in a higher low on the indicator oscillator, I mean, this thing completely would be melting down. Now, maybe it bounces right here, and that's it. And the trend line that we have drawn in ends up being the bottom, and it was like, holy shit, we nailed it. Wow, we're amazing. Maybe, or maybe it just melts down another $10. I mean, this is absolute destruction taking place. And people are like, there's no recession. Things are changed. Every time the Fed has previously stepped in and, bailed out the markets and the rates can't go higher and all. This is all bullshit narrative from a bunch of uneducated, moronic people with recency bias that are not looking back to, I don't want to hear anybody talking about the last 5 times this happened, the Fed stepped in and we can't put in higher rates and this, that, and go back to the last time we had inflation and then start reading me statistics, because that's what we have to look at, because we haven't had any inflation. We have had zero inflation since the 1980s. This is our 2-year, 10-year spread. There has never been, the entire length of this chart, this goes back from 1988. There has been no inflation this whole entire time. Zero, less than 2%, 1%, 1.8, 1.6, 0, whatever. It's been nothing this whole time. Now we have CPI prints at 5, 6, 7.9%, and we're going to get a higher one next month too, because the energy stuff's not even in here. So we can't, this whole chart, we can't use any of the actual data on this chart telling us, well, we're not going to break out because every other time we got rejected, got rejected, got rejected, got rejected. The likelihood of suddenly breaking out all of a sudden of a trend that was 40-year downtrend, now that we suddenly have inflation, which was the last time we broke out, I mean, it seems pretty likely to me. If there was ever going to be a catalyst that allowed for us to break out, for bonds to capitulate, or for yields to rise, or for things to change, or to have a massive bear market in stocks, or a massive bull market in commodities, or just a complete fundamental shift, either increase in volatility or just destruction of capital, like we have never seen before in the last 40 years, the end of a possible, secular or cyclical bull market in bonds and stocks, like we have never seen in most of our lifetimes, or at least investing lifetimes. This is it. If you literally asked me, 2 years ago, before any of this developed or anything happened, what would be the catalyst for a change that we have never seen in these markets, or that we haven't seen in our investing life, I would literally tell you, out of control inflation or out of control deflation, extremely high rates, or the bond market melting down, or, any of these specific things, divestment of capital in the United States, threatening, the reserve status of the U.S. currency, a giant war between Russia, China, and, USA or Europe or whatever, any of these catalysts, any one of them alone, I would say, this is danger, and there's potential that we see something we've never seen in our lifetimes. You take all these things and put them together, and it's like, hello, and then you look at mainstream media, you look at all these analysts, technical analysts, fundamental analysts, everybody, and they're like, we don't see any danger. The world economy is strong. Things are good. Rates can't go up because of this. Who cares about 150%, GDP debt? Like, we expect growth, world GDP growth at over 5%, and things are great. And we have more jobs than ever in the last 2 years, even though there's less jobs than there was prior. It's a total joke. And I mean, I know this rant went on longer than it should have, but it just blows my freaking mind that that people could, I mean, they're either just, there's a big movie going on and people don't realize it's a movie, and there's just a bunch of acting taking place and people think it's like real, but it's just a bunch of actors. Or, I mean, I don't know if they're liars or stupid. That's what it comes down to. Are they just really good actors and they're lying, or are people really just that stupid? I don't know. Recency bias, I guess, whatever it is. U.S. oil, basically came back down, found support, got back up to that key fib level, bouncing that fib level for now, holding. Looks like it's going to try to push back to the upside. Need this to not put in bearish divergence and break back down. Don't want to see a double top. Don't want to see a lower high. If this keeps melting up, though, everything else probably keeps melting down. VIX has gotten, did not hold that level at the 200 exponential, but it's basically at the heart line, the 20 level. This is our neutral level. We know that. The 20 level is neutral level, but it's also the bottom of the ascending support channel. If we don't hold, we already kind of didn't hold, the descending channel, which we did once before and then pushed up higher. So that's not huge red alert. We're also at the heart line of the macro, just horizontal, channel. So that's a key area we would expect to hold. The 200 exponential, the 200 simple, the heart line of the macro channel, but also the bottom of this ascending channel. If this area doesn't hold right here, if we break down from this, the market probably goes into full melt up mode. It honestly does. Now, I think we probably find support here, chop around, and then volatility goes back through the roof. But I mean, if this doesn't hold and we break back down into the range and we potentially come back down to some of these lower levels, I mean, the market is probably melting up. I mean, just going completely parabolic. Now, I don't see that happening, but if it does start to happen, we're going to position for it accordingly. So Dow Jones, it looks like it's still at that same area, just kind of getting rejected. So what is this? This looks to me like the LPSY. It looks like we have basically a giant distribution range taking place, and then we broke down from that key level, and then, put in a high, came down, put in a higher low, a lower high rather. No, lower low, that's the one. And now it looks like we're coming back up, and we're putting in another lower high, and then we'd like to refer to this in a distribution pattern as the last point of supply. And what that means is we break down from a key level, we come back up, and then there's no more supply of, buyers above this level. So then the selling takes over and we break down, put in a new low. Then we have another reaction rally, come back up, and then once again, last point of supply. There's no more supply of buyers at this level. So eventually there's too much selling and then we break down again. So losing this level, getting rejected at this level, in my opinion, is detrimental. We need to reclaim this 200 exponential and simple right here, and we could chop around here for a while, hang out as long as we want. As long as when it's all said and done, we start closing back above 35,000, I will be bullish on this again. To me, what this looks like is, it looks like we just had, a face ripper bear market rally, and we're going to go much lower. And it's about the same size as this one. So it looks to me like we're going much lower. Maybe that was our 1, 2, 3, 4, and then 5, and then we bottom. It's possible. We've looked at the macro, a million times, the daily, the weekly, monthly, key fib levels, key ascending resistance, supports, targets, all that. This was a good week. Well, really, last week was a good week, and then this week basically did nothing. We just kind of consolidated. I'm not ready to get bullish on these markets right now, and crypto did the same thing. It was melting down and then had, a bear market rally back up to 200 exponential and simple. So if stocks don't hold, crypto's not going to hold because they're completely correlated. And it's the same thing with the pot stocks. I'm not hesitating to take profits on these pot stocks because they've been getting absolutely destroyed. So if they all of a sudden have a bear market rally when they're getting destroyed and everything else is getting destroyed too, and then all of a sudden everything goes back to getting destroyed, they're just going to keep getting destroyed worse. I expect the bullish, the strongest things to stay the strongest for the longest and the weakest thing to continue being the weakest. So SPY again looks better. It's, consolidating above the 200 exponential and simple. We're seeing some momentum pick up. We obviously had the bullish divergence. We're inside the bullish control zone. Almost, we're up here at the high 90s levels, 95. So, this is where we topped out every other time. So we're very close probably to at least rolling over temporary. We're unable so far to put in a higher high. If we do, that's going to start looking even better if we get above 457. I don't think it's going to happen. It could though. That would change my perspective. Maybe we come down. Maybe we make it up there again. We come back down. We put in a right shoulder. We have an inverted head and shoulders. And then the melt up takes place. Like we were just talking about with the volatility index. I mean, we'll see. I'm not ruling anything out right now. But again, this does not look good to me. I mean, it looked good for a couple of days, but this just looks like a bear market rally. Again, bullish divergence on IXIC, NASDAQ composite. But where are we at? We're at our target. We're at our rejection level. We made it to the point where I expect us to get rejected. 200 exponential and simple, still bearish, still below them. Starting to flip the 200 simple back over, but is it really flipping back over? Or is it just going sideways and it's kind of just oscillating? As soon as we start selling off, it flips back right again and it just goes completely into a bear market, if that happens. Russell, complete trash. Didn't even get back up to those levels again. Just absolutely the weakest of the main indices. Already had the deepest retracement so far. Complete and utter trash. XLE, back revisiting the highs. Obviously oil looking decent. Nat gas. XTN, transportation, hanging on to the 200 exponential and simple. Not getting any kind of push up on this measure move. So it looks like it's going to fail and roll over and go down. If it holds long enough, though, it probably looks okay. XLF, financial, same thing. It's holding for now. This looks like a bearish reset on all these things. We basically just, price goes up a little bit, but look where we're at right now. This was our high previously, and now we're at a higher level right now. So it took a shitload of energy to get back up here. Way more than last time. And where are we at in comparison? Well, we're substantially lower. So we spent a ton of energy to put in a lower high. So we have some, assuming this started to roll over now, this would be extreme bearish divergence, and then we would likely go much lower and put in a lower low and then continue to just completely melt down. As rates rise. Wait, that doesn't make any sense. Well, banks make their money from two things, and we say it all the time, from giving people loans and from speculating on assets. So if they don't give people loans because there's uncertainty, or they're giving less loans because there's less people, and there's more risk, less credits being created, they're making less money. And if asset prices are not completely just melting to the upside, they're making less money. And we talk about all the time, if you borrow $100 from a bank and the bank paid $1 interest on that $100 to borrow, to loan to you, and obviously that's a whole nother thing. If they had borrowed at 1% and then they give it to you at 3%, the spread is 2% of the principal amount. But the difference between the 1% that they borrowed at and the 2% is 100% or 50%, depending on how you're looking at it. But it's double or half, depending which way you're comparing them. But the spread is still the same, 2%. So they're giving it to, I think I might have just made a verbal error there. 1% and 3% with the 2% spread is what I was getting at. So it'd be 33% or, 200%. So, but if rates go up, that the bank is now paying, let's say 3%, they're not going to raise it the same percentage over. That ratio doesn't stay the same. So that same $100 loan, they're paying 3% on, let's say, now they're going to charge you 5%. So the spread is still the same. They're still making 2% on that same $100, but now they're paying $3 in interest for it, and then they're only making an additional $2 on it. As where before they were paying $1 and they were making an additional $2. So before they were spending $1 in interest and they were making $2. So it was 200% more. The spread amounted to 200% more because it was 1 and 3, difference is 2. Versus if they're paying, what did I say, $2 now, and then they're giving it to you at $4, now the spread is completely different. The spread is still the same, but the percentage is completely different because now that same $2 they had to pay for it or $3 they had to pay for it, they're making a smaller percentage of the interest rate that they borrowed it at. So there's a lot more complicated metrics go into it than, well, if rates go up, banks make more money. Sure, but there's more risk and the actual spread might stay the same at 2%, but the percentage of interest that they're paying. So, if I borrow $100 and I have to pay $1 to get it, and then I make $1 on it, that's, risk reward is 1-to-1 because I'm making $1, but it's costing me $1. And then the opposite, if I'm now paying $2 and I'm making $4, it's still, the spread is still 2 on that, but the risk is more as it keeps going up. And if it goes to, let's say, now the bank is paying $10, 10% on a $100 loan, and then they're charging you 12%. Now they're paying $10 and they're making $2. So is that still as good for the bank? Or is it better when the bank pays $1 and then makes $3 or $2 profit or charges $3? Obviously, it's much, much better for the bank when they're paying that super low rate and then charging you the spread than when they're paying a super high rate and then still charging you that same spread. And that's what banks do. So it's much, much better for banks. Now, people will always say, well, if rates go up, that's better for banks. But they're actually just morons because they don't understand how the system works. So communication sector, again, looking okay for now. 821 crossing. It's going to probably try to push back up here to 71. I mean, it's taking a sweet ass time though, and it's like the worst looking sector. So XLP, consumer staples, getting rejected at that same line. Exactly what we talked about. Trying to cross up here. Maybe it gets technical breakout and these melt up. XLU, obviously utilities just absolutely crushing it. Great place to be safety wise and also paying, some of the higher dividends. XLRE, just consolidating between 200 exponential and simple, going sideways while it tries to build momentum. Again, that's, potentially a bearish reset. VWO, emerging market ETF, doing exactly what we talked about, failing to hold this support line with 2 hours left in the market. It needs to close above this blue ascending support line and the 821, or it looks like it's just going to melt back down. And this will just look like a reaction rally, a short squeeze. DAX, Germany, again, same thing. It had a nice bounce off of support, kind of shot through it and then gap back up, found support. And now look, it's failing to cross the 821 back to upside. Looks like it's going to melt back down. We need it to put in a higher low when it does, but it looks like trash. It looks like complete trash. I mean, look at, same thing again. Look at where the price was at right here, $31. And this was our stochastic at the time. And now look at where the price is at right now, $28, substantially lower on the chart. Even though it doesn't sound like much, it's 10% lower. And then when we look at where the stochastics are at, this is where they were at before, this is where they're at now. So we just used double the rocket fuel, well, 50% more rocket fuel. We got up to 60 here, and we're at 90 now. So we have 50% more rocket fuel it took to propel the price up. And when we wasted all that rocket fuel, we're now 10% lower. So we're wasting way more gas, and we're going way less high. So it's massive amount of bearish divergence developing right here. Now, maybe it invalidates. It just shoots up and just goes to the moon, and we're just waiting for the thrusters to kick in. Doubt it. Doubt it. More like Germany's probably fucked. I mean, this looks absolutely terrible. Terrible. The fact that it couldn't reclaim those levels is just horrible. Look at China. Looks like total trash. Remember, it was like China's garbage. It's uninvestable. It's trash. It's garbage. China's amazing. It's great. Everything's great now. They're going to let the regulatory agencies look at them. And now China's good and they're friends and they're not in bed with Russia anymore. And then, oh, wait, no, actually, it was probably just a short squeeze and China's just going to keep melting down. I mean, according to the technicals. UK looks pretty good, holding that heartline support. This is what we were talking about. Now, we don't want to see a lower high get printed right here because, again, I mean, look at all the bearish divergence. This hasn't quite printed it yet, but it's close. This is already printing, potential bearish divergence. We need to put in a new high on the stochastics or we have bearish divergence. I mean, between these 2 points, we definitely have it already. I mean, big time. This looks terrible. It looks like these things are just going to melt down. I mean, the UK, 100 FTSE actually looks better than just about anything else we've looked at. So, Brazil just completely pumping, continue to go to the upside. Still looks good. Yeah, still looks nice. Invalidating the potential bearish divergence. That's what we want to see. So, it probably does get that move up here. At some point in time, it's either going to top out around that same level or top out and come down and find support. But honestly, this is going to look like a buying opportunity to me. There's some headwinds for Brazil and, this could be a failed trade for sure. But honestly, this looks like it could be the potential place to be, especially if commodity prices keep just running out of control and this recession takes another, 3 months, 6 months, a year, 2 years. We don't know what's going to happen. And this is a good counter trade for everything else because we could be long on Brazil and absolutely crush it. and like, short or bearish on everything else and be right on both. I mean, Brazil could just absolutely dominate pot stocks and gold miners and gold and silver, commodities, uranium. These things could all just completely dominate while regular assets just melt down. And then, we can flip when the time is right. And this could be literally like the trade of the century. But yeah, I think we made it through everything. I'm going to skip tech today because we're already running pretty long. And it is Friday. So I'll jump in the comments here real quick. Hopefully everybody enjoyed the stream and I didn't go too hard on the rants. Although I do know you guys enjoy them. And hopefully I'm making my point. I mean, most of you guys know what's going on. But just when I hear the same narrative over and over again and it's all bullshit or wrong or just makes no sense. The one about the Federal Reserve and the interest rates and, bankrupting the government. I've provided 2 specific reasons in this stream and previously on easy ways, very simple ways that is not the case. And the fact that you don't hear other people talking about this, it's like, I'm not the smartest person on the internet. I am not, a specialist in these fields. At least my degree is not in these fields or degrees specifically. So how am I the only one that sees this stuff? It doesn't make any sense. And no one's even addressing it. Like, why is Jerome Powell not addressed these issues? Why is Janet Yellen not talking about these issues? Why are we hearing there's no chance of recession? We see no signs leading to recession. I mean, at least now, finally, the rest of the world is talking about some of these important things like yield curve inversion, transportation sector, fuel price spikes. At least now I'm hearing other people talk about them. Now, granted, the trades are already done, or at least well into it. The risk is exponentially higher than it was, when we got involved in these things. But, again, that's the difference between what we do. We're using technical analysis to predict possibility of success or probability of success or likelihood of moves and targets and risk reward and all that, so we can get positioned ahead of time. Everybody else, they're just reading the news. They're telling you what happened afterwards. It's hindsight technical analysis or fundamental analysis. The move happens, then they go and they figure out why it happened, and then they tell you about it. We do the opposite here. We're trying to be predictive. We're like the Miss Cleo, of technicals or stocks or cryptos or investments or whatever. The economy. We're reading the future of it. We're doing the, what's that called? We're doing the old Ouija board, okay? We're getting in touch with the spirits, spelling out the clues so that we can position ourselves and actually make money in these markets. Because I'm going to tell you right now, if you just wait for the headline to come out, and then every time you do what the headline says, you're always going to be on the wrong side of every trade. Because the moves are already priced in before you ever get the news. That's a fact. I mean, we see it every time, over and over again. Buy the rumor, sell the news. Nestling dumps. I'm afraid to even ask what that is, but that is pretty funny. Eric Wynn says, what are the signs that financial meltdown about to happen? Well, I mean, I think I pretty much went into all that. The 4 horsemen. Go back and watch the apocalypse video. That's, yield curve inversion, semiconductors topping out, the transportation sector, cyclical or, basically just topping out, and then, parabolic price spikes in energy and commodities. I mean, what the cure for higher prices is higher prices. The world cannot continue to operate functionally with extremely high energy prices because we need energy to do everything. Energy does everything. It's basically the lifeblood of the economy. It goes into production, goes into transportation, it goes into everything. So if energy prices are too high, GDP will get destroyed. And then we will end up in a recession or depression. It's fact. Happens every single time. So an energy spike, a 50% move, or even commodities in general, you can't make stuff without the stuff that makes the stuff. You can't bake a cake without the ingredients of the cake. So if the cake is your business and you're making, metaphorical cakes, you can't make those cakes if you can't get the flour, if you can't get the sugar, or you got to pay 10 times more for it or whatever. So commodities are, whether it's gold or silver or platinum or palladium or nickel or, oil or, sugar or coffee or flour or, whatever it is, those go into everything that's actually made. So any goods that are produced need commodities. And anything that is produced or, moved, which is literally anything that people want, requires energy. So if everything needs energy and everything needs inputs, and all of a sudden all the input costs are going up, and now the labor costs are going up because of inflation, all the input costs are going through the roof, eventually you reach a point, a tipping point, where, the cost is too high and then the demand goes down. Because, we used this example last stream. If gas goes up from $2 a gallon to $4 a gallon, you're probably going to bitch about it and it's going to suck. Sure. But are you going to stop driving? No. Now, if gas goes up from $2 a gallon to $100 a gallon, are you going to still go to work? Are you still going to your job? Are you still driving to the grocery store? Are Uber drivers still driving? Are, people still delivering groceries? Are buses still running? I mean, is the world still functioning? So if the prices go up too high, it will absolutely kill demand, because there will be certain people that are like, okay, I make $500 a week and now gas is $100 a gallon and I spend $2, or 2 gallons of gas every day driving to and from work. So if gas is $100 a gallon, I'm not going to spend $200 to go to work to make, 50% less money. If you're making, in this example, let's say you're making $1,000 a week and you go to work 5 days a week and you use 2 gallons of gas every day and gas is $100 a gallon. Now this is an extreme example. So those 5 days, you're spending $200 in gas. $100 on the way there, 1 gallon, $100 on the way back, 1 gallon. So that's $200 times 5 days. You're spending $1,000. You're going to work and you're making $1,000, and then you have to pay taxes on it. So you're losing money. You're making no money. So even if the example was not that extreme, and maybe you were spending $600 on gas, but then you're making $1,000, and then you're in a 20% tax bracket. So really you're making $800 and you're spending $600, and then you're paying someone to watch your kids, or maybe you just don't want to go to work for $200. You'd rather just stay home and, do whatever all day, watch, Jerry Springer or something like that, or, whatever it is. You're just not going to go to work anymore. So eventually there's that tipping point where people will just stop doing the things because they're just too expensive, whether it's a complete break even or whether it's just enough where you're just like, F it. And the breaking point for, in our country at least, the amount of single parents, we'll call all single parents single mothers for right now. If you're paying to have 2 kids watched every day, and maybe you're, it's not like back in the day when you could just have some 16-year-old nice neighbor girl watch your kids for, $20 while you're at work or whatever, because that girl now doesn't watch kids anymore. You want to know why? Because she's making more money than the mom is, because she's on OnlyFans. She's making $100,000 a year or $1 million a year on OnlyFans, showing off her feet and farting in a jar and selling it to people, while this hardworking single mother of 2, who's a little bit older, her OnlyFans days are over. She, unfortunately, she was around before the OnlyFans. Now she's making less money than the babysitter. So now there is no babysitter. So she doesn't go to work anymore. So now we have a huge portion of the working population not going to work anymore because they can't find someone to watch their kids. And if they do have to pay like an actual person with a job, with a daycare, whatever, or somebody that's not farting in jars with their kids around, while they're doing their OnlyFans, it's not there. It's not available anymore because we broke the economy. We broke it because too many people are doing OnlyFans because there's too much stupid money because of this asset bubble. So in order for it to unbreak, we have to go back towards the other end of the spectrum where people actually want to do jobs for decent amounts of money. Because now a mom cannot afford to pay a babysitter, even if they're, maybe it's an ugly girl, so she can't do OnlyFans. Okay. So she can't afford to pay a babysitter $20 an hour for 8 hours while she's at work, $160. And then she buys gas and leaves her kids alone with the babysitter that she has to trust for 8 hours. And then she goes to work and makes $200. When it's all said and done, what's she net making? She's making like $25 before taxes. So she's negative making money paying this babysitter to watch her kids. So you're gone. She's out of the workforce forever. She'll never go back to the workforce. She will literally just stay home with her kids and collect welfare and food stamps and any other, government program out there. She's not going to go buy insurance. She's not going to go to work. So we lose those people permanently until the dynamic shifts again. So, the economy's broken. It's manipulated so much that it's broken, and it doesn't just go back to normal on its own. It has to actually break, and then things have to go back to the other end of the spectrum. Right now we're at extreme highs for like labor prices, for commodities, for energy, for all these different things. And the truth is, until they go back to normal, until inflation goes away, even if prices don't come back down, until labor rates get normal again, until inflation goes away, until commodity prices come back down, until house prices come back down, and, you know, all these other different things, you know, the world doesn't get any better. It just keeps spiraling in this weird like death spiral, you know. And then people are like, not only are they not able to go to work anymore, now they're not able to buy food with the money that the government's giving them. So now the government has to raise, you know, food stamps another 25%, you know. And that's what happened recently in the United States. You know, if you were getting food stamps from the government, they raised the amount of food stamps they give you by 25%. 25%. So while they're saying inflation is 5%, 6%, 7%, it's going to go back to normal, the government had to raise food stamps by 25%. So then you're like, well, where's all this inflation coming from? Why is food getting so expensive? Well, because the government just raised food stamps by 25%. And now these idiots in California are saying, oh, well, gas prices are too high, so we're going to give everybody who has a registered car $400 so they can buy gas or take the bus. Oh, okay. So the one thing that's actually going to help the inflation come down, which is higher prices, you're now going to just give people more money. So then they're going to just still go pay the higher prices for the thing, and the demand won't go anywhere. They'll just have to pay more for it. So then the prices will just continue to go up. So that's how you literally get an inflation spiral, is when you have retarded retards that are retarded doing dumbass shit over and over again and then wondering why it's not working. I mean, it's like the definition of insanity, doing the same thing over and over again and expecting different results. That's the Democrats. They're insane. They're insane retards. And the people that vote for them, you know, no offense if you're a Democrat voter, but let's be real, you know, Donald Trump is annoying as fuck, but the world was a lot less shitty when Donald Trump was the president. And I mean, that sucks to say, because to me, Donald Trump is a cartoon character. I mean, I grew up, Donald Trump was like on WWE wrestling, like fighting Vince McMahon in fake wrestling matches and then having him held down while he shaved his head. Donald Trump was a character on The Simpsons, okay, when I was a kid. Donald Trump was the lifestyles of rich and famous guy. Donald Trump was like a joke, a character in society, an actor who was a businessman. So for him to actually be better than you as a president, as much as you could hate Donald Trump, the fact of the matter is, the world was better when Donald Trump was president than when Joe Biden was president, okay? And, you know, spoiler alert, it wasn't that great when he was vice president either. So, I mean, what a shitstorm of you know, a world we have right now. And the only way out of it is to change what's happening. And the truth is, you know, it's a lot of countries. It's not just the United States. I mean, look at Justin Trudeau in Canada. Look at, you know, Merkel. Look at all these fucking people. Boris Johnson. Who are these fucking clowns? You know, the world is not going to get better with these people in charge. Let's be real. Because they're just doing dumbass woke things that are making everything worse. And we're just going to keep going down this worse spiral. And our job is to figure out, hey, are they going to make good decisions all of a sudden tomorrow? No, probably not. So how are we going to capitalize on their moronic decisions? And that's what we're here for. And remember, no matter what happens, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So that's it for my end of stream wrap-up rant. On a boat in Mexico. Fuck yeah, 2 idiots go sailing. I'm assuming you live on a boat because you're always on a boat somewhere. I can't remember if last time I saw you, you were in Mexico, but touche to you, my dude. There you go, bro. That's fucking awesome. I had some friends who lived on boats, man. It's like surprisingly cheap, especially if you get like a little sailboat down in the Virgin Islands and stuff. That's awesome. Big D says, hey, Dollar Trend Trader, what's up? Yeah, right? I mean, might as well change my name to it. At least I'm bullish on the dollar. I don't know about this crypto. Now, granted, it's starting to look a little better, but 2 idiots go sailing says, any thought on the rising borrow interest for GME? The rising borrow interest. So the amount of people that want to borrow GME shares. Well, yeah, I mean, we just talked about the GME chart. I mean, it's obviously, you know, people want to short into this pump because we're in a downtrend. We're in a bear market. So as the short squeeze goes into effect, more people want to borrow it. They don't own shares in it. So when you short a stock, you have two choices. You either sell the shares you have and now you're short on it because before you were bullish and you owned it and then you sold it, so now you're short. Or if you didn't already own it and it has a massive pump to the upside, and you think it's a total shit garbage company, so you're like, oh, I want to short this garbage trash company, but I don't own shares. I will borrow the shares from somewhere else, hence the rising interest to borrow. All of a sudden I'm like, oh, I want to short this total garbage piece of shit stock after the short squeeze. So you go out and you borrow it from somebody. So the interest goes up. More and more people want to borrow it. The higher the price goes because it's trash and they're sure it's trash. And maybe I'm wrong. Maybe GameStop is just amazing. I don't know. But to me, that would make perfect sense. It's people wanting to short, a trash bag garbage company that just had a massive short squeeze in the middle of a bear market. It just had a, face ripper rally. And last but not least, the blockchain bastard says, it seems like an intentional destruction of the economy. Arguably intentional destruction over like a, 50-year period seems more like just a bunch of dumbass people making dumbass decisions. I mean, the whole Rona situation was basically things were not good in the economy. Basically it was getting crushed leading up to it. Everything was showing that we were about to go into recession and a complete collapse. I mean, Powell had to stop raising rates and then immediately just start dropping them down. People don't talk about the issues in the repo market. I mean, nobody even knew what the repo market was back then, aside from a few of us who actually, looked into this stuff ahead of time. Now, if there's one thing that's happened over the last couple of years, it's the amount of people that have gotten educated on the Federal Reserve, the Treasury, the repo markets, the yield curve inversion, the semiconductor space. I mean, it's awesome. It's awesome because I see the amount of people that are getting interested or passionate or just want to figure out what the fuck is going on going through the roof. And that's amazing. Like nobody talked about yield curve inversion 2 years ago when the yield curve was inverting. Like when I was talking about it, people were like, I don't even know what that is. Now other people are like, oh man, did you see the 5 and 10 inverted? And I'm like, yes, fuck yeah. Like, I mean, it's crazy. I've had family members that have no idea about anything that thought for years, that I was a conspiracy theorist, be like, wow, it's really weird that all the shit that you said is actually true now. And did you know that the Federal Reserve is not actually a government entity? And I'm like, holy shit, people are actually paying attention. People are like actually looking at all this stuff. So, I think it's important. Would I say it's an intentional destruction of the economy? Arguably you could say there's some master plan from like the 0.1% and all this and that. But I mean, is this just part of the end of like a cyclical, secular, like bull market, since the 1920s? And we're just getting ready to go into like a manufactured Great Recession that eventually has to happen because we've been putting it off, through Fed and fiscal monetary policy. I mean, I don't know if it's just some like master like conspiracy theory or if it's just part of like the cycles of the world. Like if you think about it, as we'll go back to our dump example. Just think about it, you got to take a dump and you just keep putting it off, keep putting it off, keep putting it off, keep doing all kinds of different stuff to not have to take the dump. And then eventually you're like, man, I just can't wait any longer. All these other things that I did, standing on my head, putting a cork in my butt, like whatever it is, these methods, think about that as like the government fiscal and monetary policy to try to put off taking the dump. But eventually, shit's got to go somewhere. And that's how I look at all this. They're just buying time, going as long as they can. But eventually, it's a one-way street. It's got to go down eventually. It's got to have some kind of reset, whatever. UniQ says, awesome stream, thanks. Oh, yeah, man. Yeah, appreciate everybody. Glad you guys always enjoy the Fridays. I want to, in particular, thank the group members. If it was not for the group members, I wouldn't be doing the Friday streams because we had a set goal for once we reached it with a certain amount of group members, people that had showed their support and obviously received quite a few benefits for it as well. And once we reached that level, we opened up the Friday streams. And, as we continue to grow the channel, grow the group, whatever, I'll continue to open up, extra streams, different days of the week or, whatever it is that you guys want. I'm already going to be potentially working on another indicator that will be for the group members as well. I love providing them with additional benefits such as the Jewel Thief and TJD Master, as honestly, they make me putting in all this extra effort and sharing and teaching and, spending time with you guys, not just, obviously, let's be real. There's only so many hours in the day and there's a lot of ways I could be spending my time. So while I want to benefit the community and share with other people my knowledge and help to teach, at the same point in time, there's like a diminishing returns type thing where it's like I can give a couple hours to the community, but eventually it starts costing me more than it's worth. And with the support of the group members, it makes it so that I can justify the amount of time and effort that I put into sharing these. Because a lot of people are like, oh, I can't believe you don't have 10,000 subs or 100,000 subs or whatever. Well, people don't want to learn. People want just, hand-fed, spoon-fed bullshit, or they want, somebody to just tell them, HODL and XRP is the future. And, or whatever it is, like silver short squeeze is coming, just hold a little longer. Or, Tesla is going to take over the whole world and, people just don't understand it and it's misvalued. Or, that's what people want to hear. I don't do that. When things are bullish, I tell people they're bullish. When they're bearish, I tell people they're bearish. And then a lot of times people show up afterwards and go, oh man, I wish I would have found the stream right before this big move happened that you perfectly predicted. And those people usually stick around because they're like, oh shit, this dude actually knows what he's doing. And then, people that want to actually learn, I always say it, invest in yourself is the best investment you can ever make. Before you even should be honestly investing in cryptos and stocks and all this other stuff, you can be number one, you should be investing in your own education. Because you really are buying into other companies and you're betting on the hard work of other people. If you really care about your future and about yourself and being, successful, making money or whatever, you should be investing in yourself first. Because you have a vested interest in making sure that you succeed. Investing in GameStop, you're like trusting, the people in GameStop to do good with your money and spend it in a good way. And that's what you're doing. You're buying a portion of a company and then they're going to spend that investment in a way that you're hoping makes more money for you in the future. You spend that same money educating yourself or, on books or, courses or indicators or, joining groups or learning or, whatever it is, whatever kind of education, that's going to benefit you exponentially more over the next 30 years than some investment in, 99% of the companies out there. And then once you, know enough and grown enough and you have enough capital that now you need to just deploy it in other places, you can't find places to spend that money in your own business or on your own education or on yourself. That's when you start looking in and you start paying for the hard work of others because you're like, oh, let me put this work, money to work for me. Someone else does the work and then I don't have to do all the work myself. I'm branching out into investments, into speculations, into whatever. That's how I look at it anyway. If you're not already educating yourself so that you can be a better person into the future, you're betting on the wrong horse because you're the one who has the number one biggest vested interest in your own education, self-success, whatever, because you reap all the benefits. Other people might reap some of the benefits too, but you get the first-hand smoke. They get the second-hand smoke, so to speak. 280 Sailing says, ha ha ha, I'm not sure what you're laughing at, but I'm sure it was probably inappropriate and funny. The Blockchain Bastard says, laugh out loud, I never thought of it that way. The dump is inevitable. The dump is inevitable, my dude. It is inevitable. You can do whatever you want, but eventually the butt plugs got to come out. Eric Wynn says, great stream. See you on the next one. Yep, that's it. Going to wrap it up there, guys. Appreciate each and every one of you. Hopefully y'all enjoyed the stream. Thank you to all the group members. I did open the group back up for a couple more people. I have actually, technically it should be filled again, but 2 people that I was holding spots for did not respond after the last time I contacted them. So I potentially have 2 open spots. So if somebody has been putting it off, been waiting, and wants to join the group, thinking about joining the group, whatever, reach out to me. I didn't expect it to, it's been going great. So I appreciate each and every one of the people that show their support. You do get access to the indicators permanently, and then obviously 24/7 access to the Discord group where we're always going back and forth. Quite a nice community, all good people all over the world. Definitely as international as it gets. But that's going to do it for today. This is our Friday afternoon weekly market wrap up. Everybody have a good weekend. It is Friday at 2 p.m. Eastern Standard Time on March 25th, 2022. Make sure to check us out for the next one. It will be Sunday at 8 p.m. Eastern Standard Time. And then, of course, Wednesday at 8 p.m. Eastern Standard Time. And every Friday at 11 a.m. Eastern Standard Time. But that is it for today. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto Trend Trader, and I'm out of here.